Tai sveiki, kolegos.
Good morning, dear colleagues. I'm very glad that we are able to start the Tax Disputes Commission conference, and hopefully we will have a fruitful day, and we'll start the conference, the International Practical Scientific Conference, Tax Sustainability and Certainty, a Global and Local Approach. This is our tradition, and probably the only change is that the conference is international, as we have some colleagues ready to share their knowledge from abroad. We can only rejoice in the fact that the conference is growing bigger and wider and getting more and more interest. So first I'd like to give the floor to the Vice Dean for Studies, who is going to speak in the name of the Dean. Dear Jurgita, the floor is yours. Good morning, dear ladies and gentlemen, especially from Asia. Our faculty, the Faculty of Law, Vilnius University, is very glad that this is the third conference organized together with Tax Disputes Commission on tax issues. Tax issues seem to be forgotten in law, but we see that these issues receive a lot of attention during this conference. So we're very glad that we managed to organize the conference on the issue of tax sustainability this year, which is also probably one of the first occasions to have a discussion on the topic. So I hope that all the presentations are going to be of interest to everyone. Thank you to all the foreign lecturers who've agreed to give their presentations, and hopefully this is not our last international conference at the Faculty of Law of Vilnius University. So have a good time, great discussions, and we are glad to provide this venue for practitioners and theoreticians to meet. And so have a good day, and I'll be chairing the second part of the day. So we'll see each other again.
Hello everyone, my name is Gintautas Bartkus, and I will, first of all, I need to start from briefly to introduce rules of the house, so to say, and we will have 4 parts in our conference. The first part will start, and we will finalize all the parts with the question and answer sessions. So please, if you have any questions and answers, which of course are very welcome, please use Slido application. There's a QR code on the left side of the screen. Otherwise, you can use the special code, which is 3312325. Once again, 3312325. So, and please, indeed, we will be very happy to have your questions and questions, and we will be, of course, the speakers will be eager to answer them. So, but just please use Slido application. So that's most probably all the rules of the house we have at the moment. So now we can move to the first part of the conference, which is where we have actually 3 excellent speakers, and I will briefly introduce each of them. So the first one, Professor Friedrich Schneider, who is a professor of economics at Johannes Kepler University of Linz. I just need to mention that Friedrich Schneider is author of more than 78 books and more than 216 articles in scientific journals. And this number is not up to date because it's the data from 2016. So just imagine, we have a really great scholar here with extensive experience in the matters which we are going to discuss in our conference. And as well, I need to mention that Professor Schneider, former president of the German Economic Association, board member of the International Institute of Public Finance, with huge consulting experience for the Federal Austrian Chamber of Commerce, Federal Austrian Ministry of Economics, Federal Austrian Ministry of Finance, Central Bank of Germany, Austria, EU Commission, and you just need to name all these institutions. It's obvious, and the experience is without any doubts. I just have a question from myself to Professor Schneider. Do these institutions really listen to the academia? But that is more a theoretical question. Okay, and Professor Schneider will evaluate the size and development of the shadow economy in Lithuania, of the two other Baltic countries, and the primary reason people choose it. Finally, policy measures to reduce the shadow economy will be introduced. So the second speaker is Professor Patrick Kowalski. Professor Patrick Kowalski is from University of Łódź. He's an assistant professor at the Department of Finance, Public Law, Faculty of Law and Administration. At the same time, Professor Kowalski is a member of the Bar Association and previously worked in the district court and regional courts. Professor Kowalski is the author of the various studies, of which I would, one of which I would very interesting. It is a study called Dissenting Opinions in the Case Law of Collegial Financial Authorities. It would be really fascinating to read it. So Professor Kowalski is going to summarize us the legal and tax system in Poland, and will discuss the principles of sustainable development and tax solutions, and will present some selected case law on environmental related taxes. So, and the third speaker for our first part of the conference would be Professor Pei-Fen Chan from Taiwan, from Institute of China and Asia Pacific Studies. Professor Chan starts her curriculum vitae with the following: I love data. And indeed, her experience dealing with the global financial and economic data began in 2006. Professor Chen has been awarded the Excellence in Teaching, Excellent in Mentor, and Excellent in Research award several times. Professor Chen will outline the trend of green financing worldwide and in Taiwan. She will also discuss green finance policies, regulatory initiatives, implementation issues, and solutions in Taiwan, along with the practical examples and statistics. And by the way, congratulations, Professor Chen, on the 113th National Day of Taiwan, which we will celebrate here in Lithuania as well on October 10th this year. So, and now without further ado, I would like to give the floor for Professor Friedrich Schneider, and floor is yours.
Okay, thank you very much for the kind introduction. I'm sorry that I was somewhat late, but I thought we started an hour later, but we made it. Okay, the topic of my lecture is size and development of the shadow economy in the Baltic countries, a blessing or a curse. There is a lot of debate about the effects of a shadow economy, and besides that I show you the latest developments in the size, I will tackle this topic quite extensively. Next slide, please. Next slide, please. Okay. As I said already, there are many political statements about the shadow economy. Also in your country, it's hotly debated. In order to shed some light on these arguments, whether they are true and how relevant they are, the lecture of my goal and my presentation is threefold. The first one is to present the size and development of the shadow economy in Lithuania and two other Baltic countries up to the last year. To discuss the major causes why people work in the shadow economy. And finally, policy measures to reduce the shadow economy are presented. Next slide. A shadow economy has many names, like cash, underground, gray, or sometimes dark economy. There is no convention what the correct name is. The shadow economy or informal employment is more or less a parallel economy, meaning that besides the classical informal activities, additional ones are captured also when I measure a shadow economy. Neighbors or friends help, do-it-yourself activities or family production in general and especially in the agricultural sector. Hence, and I got a lot of criticism for the size of my figures. This is one consequence that by using macro methods, quite often a too large shadow economy is measured. Quite often do-it-yourself is included, which shouldn't be. I'm aware of this, but I can't prevent it. Next slide, please. Now, a very few theoretical considerations. What is a shadow economy? The research and the difficulty starts how to define it. I use now a common definition which is used all over Europe or in a lot of international organizations. A shadow economy includes all legal production and provision of goods and services that are deliberately concealed from public authorities for the following four reasons: to avoid payment of income, value added, and other taxes, to avoid payment of social security contributions, to avoid having meet certain legal standards such as minimum wages, maximum working hours, and others. And finally, to avoid complying with certain administrative procedures. So that is my definition. Crime is, I try not to include crime, but quite often it is. Next slide. Besides shadow economy, we have underground activities that are all illegal, underline illegal actions that fit the characteristic of classical crime activities like smuggling, burglary, drug dealing, and others. And the third sector, which I already mentioned, is the informal household and do-it-yourself activities. These are household actions that are not registered officially under the various specific forms of national legislation. These two activities should not be included in the shadow economy activities, but to some extent they are. You will see it later. Next slide. Now, what are the main causes determining the size of the shadow economy? Here I summarize my research over 40 years and those of other people. As I said already, the tax and social security burden, intensity of regulation, and yet in brackets you always see the sign, a positive sign means the higher the tax and social security burden, the higher the shadow economy. Intensity of regulation, public sector services, here I mean if the state provides a bad service, then or too little service, the shadow economy will increase. And if it provides a good service, the shadow economy will decrease. There you see the negative side. Tax morale, unemployment, high unemployment means people have more time, have more opportunity to work in the shadow economy, and they do it. Self-employment, this group of people has simply more possibilities to work in a shadow economy. Size of the agricultural sector, official income, quality of public institutions, and political systems. If people have a stronger say and can determine with the authorities about how much will be spent, as it is in Switzerland done, we have a lower shadow economy. Now, what are the main indicators in which shadow economy activities are reflected? It's the official GDP, it's cash, maybe not be used so more in your countries, was in the Baltic countries, cash is much is more and more less use, and official employment. All these 10 causes, but especially the tax burden regulation, unemployment, self-employment, and size of the agricultural sector, are also major driving forces for smuggling do-it-yourself activities and neighbors' help. Hence, in the mimic, which you will see, and currency demand estimations, these activities are at least partly included. Therefore, these estimates are higher than the true shadow economy estimates. I label this one as macro ones. Next slide. How do we estimate a shadow economy? I will be very brief here, would be a lecture of its own just to give you an idea. We have direct procedures, in principle, who try to ask people on an individual level how much they work in a shadow economy and what their motivation is. Quite difficult to do, but not impossible. Indirect procedures, two of them you will see, they make use of macroeconomic indicators as proxies of the development of the shadow economy over time. For example, the currency demand approach. I will explain it in a minute. Statistical methods that use statistical tools to estimate the shadow economy as an unobserved or latent variable. For example, the mimic multiple indicator, multiple causes method. Next slide. Here you see the idea of the mimic model, a very simple one. You have the shadow economy in this circle, which you can't observe directly. But you know there are certain causes why people work in the shadow economy. Some I have listed here. And the sign is, again, the expected sign, the higher the share of direct taxation, the higher the shadow economy. Shadow economy is reflected in indicators like employment quota, average working time, change of local currency per capita. Now, the difficulty is to find a measure of the shadow economy in this circle. Next slide. Now, what is the result worldwide? So that you have an idea. Here you see worldwide regions classification by World Bank and IMF, Sub-Saharan Africa, Latin America, etc., up to the OECD countries. And what you see on these slides in the period over 1990 up to 2017, that on average in almost all regions we had a decline of the shadow economy, which is in some regions more pronounced and in others less. Yeah. And of course, you see completely different levels. In Sub-Saharan Africa, we have quite high shadow economies, starting with 42%, going down to 34%. And in the OECD countries, it starts with 18% and goes down to 14%. So that is a worldwide picture. Next slide, please. Now, how does it look for Europe and for your country? Here you see, please consider these are averages over 2008 to 2020. So this is not a development over time. That's a cross-section comparison of European countries. You see on the right side, Russia and Ukraine with quite high shadow economies and maybe even higher. It's now very, very difficult or almost impossible to measure it because of the war. If I look for your country of Latvia, Lithuania, Estonia, you see 24, 26, 26. So you are in a quite similar range, about 20% as an average figure over 2008 to 2020. Next slide. Here now you see the development over time, which I think is important too. And I have yours, the three countries, the three Baltic countries. On the bottom, your country, Lithuania, and then Latvia, Estonia. And here you see over the time and compared with Denmark, Finland, and my country, Austria. Now, what you see, if I discuss first the result of the Baltic countries, what is also true for the other countries, at least to some extent, that you have a quite strong decline. You all start with far above 25%, and then it goes down to 23, 20%. So it's a decline over time that is for policy makers a good result. The shadow economy is declining and is further declining in your countries. One remark to these estimation figures. There is no precise estimation. A shadow economy always has an error margin or confidence interval of plus minus 20%. One should clearly say this. Now here I show you in this figure a comparison of the size of the shadow economy in the Baltic countries, applying 3 different estimation methods. So that you see there are other methods, you get different results. And here you see the blue line, Schneider macro mimic estimate, which you saw, 26, 23, 28 is only for 1 year so that I can make a better comparison. But if you look at the corrected figures, if I cancel out all do-it-yourself and other activities, you see it goes down to 17%, which is very similar to the estimates by Putnins and Sauka, who use an estimation method of a questionnaire with firm managers and estimates the shadow economy hands of firms. And Zukauskas and Schneider, again, a survey method. So you see, if you correct the macro figures, they are roughly in a similar range. Not for every country. If I look again for Lithuania, for your country, you see the lowest one is below 10% with the Zukauskas and Schneider survey method, and the other one then follow. So one sees here, and I show this picture you with intention. It's not 26.2% or 25.8%, neither 9.8%. If you do this estimation, you get a range of the shadow economy. Next slide, please. Now, what are the important drivers? What are the drivers of the shadow economy here over 2010 to 2018? So these are all the main causal factors. If I go to your countries, you see that the indirect taxation is one of the biggest drivers. Yeah. Then followed more or less, it's a bit different from country to unemployment. Yeah. Then personal income tax does also play some role, but indirect taxation is much more driving factor. Also, self-employment is some driving factors. The business freedom also, and the tax morale, which is asked the European EU Commission by a survey, also has some influence. So here one sees that lowering the tax burden, lowering unemployment would be the most efficient measure to decrease a shadow economy. Next slide. Now I come to policy measures so that I stay within my time. In every country, and also in your country, government faces a challenge to undertake policy measures which reduce the shadow economy. The crucial question, however, is it a blessing or a curse? Shadow economy, let me remind you, is value added, is not damage, underline, not damage. It's extra value added, which is as valuable as all actions counting your official GDP. So if I repair the car in the shadow, in the black, and the car runs again, it's exactly the same activity to replace the clutch, for example, when you do it in a official garage with an official bill. So that's one should always keep in mind. And a decline of the shadow economy will only increase the total welfare if the policymakers succeed transferring the shadow economy activities into official one. So if just stops them, you are worse off. Therefore, a policymaker has to favor and choose such policy measures that strongly increase the incentives to transfer the production and labor from the shadow economy to the official one. And only then a decline of the shadow economy and of informal employment will be a blessing for the whole economy. Next slide. Now, I have here 7 policy measures coming from the analysis, what are the main drivers. Here you have unemployment. This can be lowered through additional Keynesian measures, additional public spending, or a government can try to improve the country's competitiveness, increase foreign demand, and then shadow economy goes down too. The impact of self-employment on the shadow economy is only partly controlled by the government. A government can deregulate the economy or incentivize to be your own entrepreneur, which would make self-employment easier, potentially reducing unemployment and positively contributing to efforts to controlling the size of the shadow economy. Next slide. These 2 policies need to be accompanied with strengthening of institutions and trust in public institutions to reduce the probability that self-employed shift reasonable proportion of their economic activities into the shadow economy, which, if happened, made government policies incentivize self-employment less effective. So if people who are self-employed have a strong incentive to do activities in the official economy, shadow economy will be decreased. Besides these measures, policymakers should focus on reduced overall taxation, especially direct taxation, but also indirect taxation. But this is more difficult, but then you might face a deficit. Equally important is the quality of the institutions, creating democratic and transparent institutions which leather regulatory burden, corruption, and bureaucracy in order to able to restore trust and confidence of the people in the public institutions. And finally, reducing the administrative burden on business by simplifying the procedures for obtaining licenses, accelerating the release of documents required for entrepreneurship, reducing bureaucratic barriers for such documents, and increasing transparency of the whole process. Next slide. Also, use of cash, at least in all over Scandinavia, is hotly debated how much it is needed and what one could do. One could take measures discouraging the use of cash by increasing popularity of electronic payments. Key measures are here development of adequate infrastructure for bank cards and other electronic payments, particularly in the service sector and rural areas. This you have in your country already. You are leading in this respect. Creating incentives for companies that encourage their customers to use electronic payments and to pay the salaries of the employees into the bank account. So the famous envelopes wages, which are much more famous in your neighbor Poland, is still a problem all over the Baltic countries and some other former East Bloc countries. Organizing unscheduled inspections in companies to verify that card terminals and other related infrastructure work correctly. Maybe this is not so important for your country. Next slide. This is all I have to say. I had only roughly 30 minutes. I think I stayed within my time, and I'm looking forward to all your questions. Thank you very much.
Yes, thank you very much, Professor Schneider, and thank you for staying within the limits we have for the presentation. That's really sometimes difficult to do, but once again, thank you very much, and the presentation is really brilliant. So I just wanted to remind everyone that you are welcome to post your questions, and please use the application here on the left side. Left side of the screen. Either go to Slido directly and then insert the code, which as well you can see on the screen. It's 3312325, and we already have several questions ready. But as I mentioned earlier, we will discuss the question, and we will have question answer session after all the three presenters will make their presentations. And now it's time most probably to invite our second speaker, Professor Patryk Kowalski. Professor, are you ready?
Yes, I'm here. Do you hear me?
Yes, we do.
Yes. Okay. So should I share my presentation or?
Yes, please.
Do you see my whole presentation?
Not yet.
Yes.
Just a second. Yes, now it's everything on the screen.
No, it's okay.
So once again, you are welcome.
So thank you very much. Good morning, everybody. Thank you so much for coming for my presentation. And of course, I would like to thank organizers for the invitation. It's such a pleasure to be here in such conference, even via online. So I was introduced, and thank you for that. I will skip this part. I would like also to add that my scientific interests are connected with the interpretation of tax law by courts. So the title of my presentation is the Principle of Sustainable Development in Polish Tax System. I do hope you find my presentation informative. So I will start with the presentation plan. I will give you some basic information about the legal and tax system in Poland. Then I will tell you about the principle of sustainable development and tax solutions. And next, I will present selected Polish case law on environmentally related taxation and give you some conclusions. So tax system is in Poland is rather complicated. We have below average standard corporate tax rate of 19%, and the OECD average is 23.6%. We have rather flat taxes on labor, and Poland is a rather unitary country with centralized tax authority. Now let me tell you about the principle of sustainable development and tax solutions. So the principle of sustainable development has its source in constitutional law, as stated in Article 5 of the Polish Constitution. As you can see, the Republic of Poland shall safeguard the independence and integrity of its territory and ensure the freedoms and rights of persons and citizens, the security of citizens, safeguard the national heritage, and shall ensure the protection of the natural environment pursuant to the principles of sustainable development. So the last part is very important because this constitutional definition of this principle could be understood as a, of course, constitutional principle or a principle of state policy. In the context of taxation, the second interpretation is more crucial. It is because that the principle of sustainable development is a norm that requires all bodies to strive to achieve a state of sustainable development. This approach results in the fact that public authorities should be guided by the guideline in the form of continuous development, in the process of which the constitutional, social, economic, and environmental values should be proportionally balanced. So the implementation of this principle may consist of introducing appropriate tax institutions by the legislator. The concept of tax institutions should be understood very broadly, as the creation of a new taxes or a change to the existing ones, or more precisely, their structural elements. This action is related to rewarding the stimulating function of taxes over the fiscal function of taxes. Of course, what is the creation of a new taxes? So it could be understood as an introduction of new fiscal burdens on taxpayers who do not implement the assumptions of sustainable development through their activities. And on the other hand, changing existing taxes could be interpreted as reducing the tax burden on taxpayers who implement tasks related to the principle of sustainable development. The Polish legislator implementing the principle of sustainable development as a policy principle has introduced many legal instruments into tax law that serve to implement this principle. And these solutions could be divided into two main types of legal instruments: ecological taxes and ecological tax preferences. What is the environmentally related tax? According to the Article 2, Section 2 of the EU Regulation number 691, 2011, as you can see, this is a tax whose tax base is a physical unit of something that has proven specific negative impact on the environment and which is identified in ESA 95 as a tax. And what is more, according to Eurostat statistic, environmental taxes revenue is divided into four main categories: energy taxes, transport taxes, pollution taxes, and resource taxes. And this slide shows examples of environmentally related tax solutions in Poland. In the paper which has been delivered, I discussed them in more detail. Here I will limit myself to listing them. So, for example, as you can see, environmentally related taxes are, for example, excise tax or emission fee, tax on transport vehicles itself. But however, tax exemptions are like benefits received from environmental protection funds, or some exemptions for ecological areas, and tax reliefs are connected with deduction and 0% VAT tax rate for marine environment protection. So now let me present some selected Polish case law on environmental related taxes. I have chosen, due to the time limits, I have chosen to discuss two court cases issued in the matter of environmental taxes. Both are relatively new. Judgments were issued in 2024. For the purposes of this conference, I have chosen cases whose factual state includes Lithuanian context. But before that, let me present some general facts about Polish judicial system. So in Poland, we have a separation of administrative courts from common courts. Administrative courts control the activity of administrative bodies only in terms of complaints in the law. And in the event of violation of the law, a cassation judgment is issued. Reformatory judgment is an exception. We have 16 administrative instances and one Supreme Administrative Court in Warsaw of second instance. So now let's look at the first case. Facts of the first case was as follows. It is a judgment of the Administrative Court in Białystok, June 19, 2024. So the Polish company sold almost 100 hectoliters of beer to a Lithuanian company. and the Polish company commissioned the buyer to collect the goods. Of course, the Lithuanian company itself transported the beer to the warehouse in Kejdanai. The Polish taxpayer filled an application for a refund of excise duty paid on 900 liters of beer. By the decision of both instances of the Polish tax authority refused to refund the excise duty in the amount of 140 euros. Of the authority, the party did not meet the condition necessary for the refund of excise duty specified in this Article 82 of the Polish Excise Duty Tax Act, making the intra-community delivery indicated in the application. Referring to the definition of intra-community delivery, Article 2, Section 1.8 of the Excise Duty Act, the authority indicated that the excise duty refund is due to the entity that made the intra-community delivery of goods as a physical transfer of goods to another member state. This, according to the tax authorities, excludes from the group of entities entitled to the refund those that did not make or did not commission the actual transfer of goods to another member state. Since the Lithuanian company that took and transported the beer, the Polish taxpayer is not entitled to excise duty refund. The administrative court did not agree with the authority's position and annulled the contested decision. Interestingly, court indicated that the tax authority issued a decision in accordance with the case law and tax authorities and with the literal wording of the provision. But the court itself clearly stated that it interpreted the premises of the above-mentioned provision differently, and moreover states that dominant view is incompatible according to the linguistic and systemic interpretation. So we can make a question that court stated that logical legal interpretation reveals the literal legal interpretation. But this judgment is not final. We have to wait for the final judgment of the Supreme Administrative Court. And the second case, the judgment was issued by the Administrative Court in Olsztyn, February 13, 2024. The state of facts are as follows. In 2021, a Polish company purchased a Bentley passenger car from a Lithuanian contractor. The price was 7,000 euros. The company purchased the vehicle before the first registration of this car in Poland, and therefore, so Polish buyer was a taxpayer of excise duty. The company filled a simplified declaration for excise duty on the intra-community delivery of the car. In declaration, it was indicated that the tax base was 7,769 euros. After converted it in the Euro tax catalog, the head of the Polish tax office stated that value of the vehicle was much, much higher. It was, after taking into account taxes, it was 103,295 euro. And by the latter decision, the authority determined the amount of excise duty for 19,213 euro. And of course, the second instance body upheld the decision and analyzed the history of the vehicle. The documents which have been collected indicate that the vehicle comes from the USA and the car was imported into European Union by a Belgian company. The customs clearance declaration indicates that the statistical value of the vehicle was total amounted to 23,542 euros. So the tax authority indicated that in the light of relevant regulations, one of the reasons that may justify a significant deviation of the purchase price of a passenger car from the average market value, such vehicles in the country are the conditions of the market on which the car was purchased. So Polish authority have investigated the prices for damaged Bentley cars from 2007 to 22 on Lithuanian market using such websites like Autoplius LT or Autoline LT. And surprisingly, the body did not find any offers for the sale of such cars. The administrative court dismissed the complaint. It has been assessed that tax authorities conducted evidence procedure to a sufficient extent for the proper resolution of the case. No violation of substantive law was found, and the court found that the basis of the conducted case to determine the reasons why the stated value of the tax base differs from an average market value of the purchased car. So it should be emphasized that the criterion of the vehicle's value is decisive in the case, not its price. Value is an economic concept referring to a passenger car with specific technical features. Is an economically objective concept derived from the characteristics of the goods, the circumstances of acquisition resulting from price negotiations do not constitute a premise justifying the determination of the tax base at a level other than the value of passenger car. And these conditions do not affect the value of the vehicle, they only shape its price. So the tax authorities, it's Article 104, Section of the 9 of the Act of Polish Excise Duty, did the right thing by specifying the tax base amount. So to conclude, the analysis of the Polish tax law provisions and selected case law did not exhaust all problems related to the implementation of the principle of sustainable development into Polish legal system. However, it provided some conclusions. And the principle of sustainable development is a principle that occurs both at the international and European level. What is more, it has a constitutional origin. As a policy principle, it has led and continues to lead as a result of legislative changes to the creation of tax regulations for environmental protection. By resigning in principle to a certain extent from budget revenues, the legislator stimulates pro-ecological behaviors in society. This is done by introducing taxes that are pro-environmental, burdening taxpayers' negative behaviors in the sense of the titular principle, and tax preferences, rewarding taxpayers' positive behaviors in the sense of the titular principle. As for specific legislative instruments themselves, their catalog is undoubtedly diverse. But the question remains whether it is rich and how Poland compares in this case to another European Union countries, such as Lithuania or Austria. Comparative studies conducted in the future will be helpful in this. So thank you very much. I want to thank you once again for allowing me to speak.
Thank you. Thank you very much, Professor Kowalski, for a very interesting presentation. So now it's once again, I just wanted to remind you that if you have any questions, please post it on using the Slido application. Now it's a time to introduce our third speaker for the first panel or for the first part of the conference, Professor Chen. Professor, are you with us already?
Yes, I'm here.
Oh, that's very nice. So yes. Then floor is yours.
Okay, thank you. Thank you, the host of the conference. I am Pei-Fen Chen from Taiwan. I am affiliated in National San Yat-sen University. I'm an economist. Recently, I had a co-project with Dr. Remekne Rita in Vilnius University. So I spent almost 3 months in Vilnius University and just came back in September. This is the topic I'm going to talk about is part of the result from the project. Okay, let me use my screen. Let me find it. Sorry, I'm still looking at my file. It's here. It's here. Okay. It's this one. Okay, is it clear that can you see my slides?
Yes, yes,
Can
thank
you
you.
see?
Perfectly.
Okay, okay, thank you. Then I will begin.
You're welcome.
The topic is green finance development and tax policy in Taiwan and EU. Actually, it's more like in Taiwan and Lithuania. However, when I was in the Vilnius University, the documents or the research not just cover Lithuania, so I was having a little chance to extend a little bit. Okay. And this is where I'm from. I'm from the Institute of China and Asian Pacific Studies, National San Yat-sen University, located in Kaohsiung, a south city in Taiwan. The reason I wanted to start this research is because by a few research articles that not all funds raised in the financial markets are channeled to finance green technologies, including to finance the renewable energy production. So I have a few examples, like in Denmark, during the past 15 years, the average size of the credit market to GDP was 176%, while the average green bond proceeds to GDP means that the amount of green bond to GDP ratio is just 0.25%. And also in Luxembourg, that the credit market to GDP ratio is 96%. However, the green bond market to GDP ratio was only less than 1%, 0.75%. Okay, meaning that that very, very few funding goes to green projects. I may have to talk about the meaning of green finance first, because it's in my topic, right? The green finance means that financial institutions, mostly banks, finance green projects. Okay, so they can finance projects that help to reduce the greenhouse gas emission, or helps to increase the renewable energy. Okay, or the finance goes to projects that helps the sustainable development of an economy. Okay, so that all that kind of finance is called green finance. Of course, there are many types of green finance. A few examples are like green bonds. Okay, so if a company that has a project that is supposed to help to produce renewable energy, that is a kind of a green project, and the company can issue green bonds. Okay, so the type of green finance typically are like green bonds or green loans that green projects can get finance directly from the banks. Okay, Also, there are other bonds like called sustainable bond or social bond. Okay, these are typical types of green finance. Okay, with this background, this is an illustration of the data that the gray bar are the regular loan to GDP ratio, and the green bar is the green bond to GDP ratio. So as we can see that for most of the country in this plot, the gray bars are a lot more higher than the green bars. And I believe Lithuania is also the case. It's here. Okay. So with this research background, I get the idea that there's a lot of room to improve for the green finance market. Okay. And the motivation of doing research for Taiwan and for selected economies in EU is mainly is for Taiwan, is because Taiwan is not included in Paris Agreement. However, we are capable of contributing our technology and our determination and our willingness to participate in these global sustainable activities. So for when most economies are struggling with the economic slowdown caused by the pandemic, we have a high growth rate still. For the past 5 years, the growth rate are during 1 to 6%. So never negative growth rate. Okay, so and also Taiwan's action on green finance development against global greenhouse gas emission reduction have not been empirically investigated. So I like to investigate how our effort is effective to the global greenhouse gas emission. Also, the development of Taiwan in green finance has not been evaluated with other economies or regions. So the aims of the research is first to investigate the deployment and development of green finance in Taiwan's banking industry. The second is to examine the relationship between green finance, greenhouse gas emission, and renewable energy production. The third one is to discuss the development and challenges in green finance regulations in Taiwan. And the fourth one is to wrap up the above goals, the above purposes, and also extend the above points to the investigation of the investigations of selected economies in the EU. Okay. These are a few literature that is related to my topic. I won't spend time on this. However, I like to let you know that the related literature mostly focus on the research of how green loans or green finance or non-green loans can affect the renewable energy consumption or renewable energy production or ecological footprint or renewable energy production. Okay, so these are the literature. And the following few slides are a little bit summary for the selected articles. Okay, let me skip this part. Okay. Oh, also there are a few research related to Lithuania and also a few countries in Europe, also 3 botanic countries. And then I'd like to talk about Taiwan's green finance policies. The most 2 important green finance policies are the Taiwan's pathway strategies for achieving net zero emission by 2050. And the second one is Green Finance Action Plan. Now it's version 3. So I'm going to talk about the Green Finance Action Plan. The idea is based on the international consensus on the net zero emission by 2050. Okay. Also, in Taiwan, the green finance is one of the 12 key strategies in Taiwan's pathway to net zero emission in 2050. Also, we'd like the companies, consumers, and investors to have attentions to climate change issues. Also, the financial market is a key driver for net zero emissions. So all of these projects requires funding. Okay. The framework for this green finance action plan is the first is a vision. It's like the last slide. And we have 3 core strategies. One is to collaboration to promote sustainable development. Also greenhouse gas emission disclosure and financing carbon reduction. Third one is data integration. And we focus on the 5 aspects: deployment, funding, data, empowerment, and ecosystem. However, we still have a lot of challenges. I believe that in not just Paris Agreement, in all the efforts that each economy has applied, there are a lot of challenges. Okay, and the challenge for Taiwan is we have insufficient greenhouse gas inventory information. So the information is not integrated. Okay. Also, the domestic financial institutions differ in characteristics and scales. So each financial institution has a different idea of how they want to finance to green projects. Also, even for the very basic thing, the green project or sustainability project has not been clearly defined. As well as that, we think that we need more ESG data so that we can plan better on the green finance development. The last one is insufficient professional talents, that we need more people that devoted to this area. Okay. This is the ways that we try to do that. Because of time, the organizer has my slides. So if you miss some information, you can require for my slides. These are the ways to do it, like we want to introduce sustainable finance certificates, also enhance sustainable finance training for directors, senior executives, and employees of financial institutions. Also to encourage social communication on green and sustainability issues and carry out sustainable finance ideas. Okay. Also, we have some regulations that is the direction that any kind of green finance projects should follow. There are 6 regulations that I think is most important and most related. Like we have Basic Environment Act, we have the Electricity Act, also Climate Change Response Act, and Renewable Energy Development Act. The 5th one is Taipei Exchange Operation Directions for Sustainable Bonds. This is more like a platform that has that is trying to integrate all the data and reveal data to the public, especially to financial institutions. And the last one is Sustainability Finance Evaluation Scheme. This is an evaluation platform that makes sure that all the green finance is actually financed to green projects, not the others. Okay. Okay, and the underlying one is the one that I like to talk a little bit. So this is Taipei Exchange is our stock exchange. Okay, and Taipei Exchange is also responsible for the operation directions for sustainable bonds. Okay, and this guideline ensures that bond issuance are transparent, accountable, and aligned with international sustainability standards, therefore thereby fostering the development of sustainable financing in the region. Okay, and when any project or any company that want to apply for accreditation, issuers should ensure that the funds raised are directed toward specific projects or debt repayments associated with those projects. Okay, and the document outlines the type of projects eligible for funding. Okay, so these are some guidelines for green bond and sustainable bonds. So in Taiwan, we have green bonds, social bonds, sustainable bonds, and sustainability-linked bonds. Basically, sustainable bonds is a combination of green bonds and social bonds. Green bonds is the basic one that is aimed to proceed for projects that benefit for the environment. Social bonds is benefit for social projects. And the sustainability bonds is a combination of the first two types, and then sustainability linked bonds. I'm not sure I have so much time, so let me speed up a little. And all these guidelines of Taiwan are basically referring to the global principles or the EU principles that already are there when Taiwan was in the beginning of making those regulations and policies. So, for example, green bond principles and climate bond standards and EU green bond standards, also sustainable financial disclosure regulations. I was going to talk about green bond principles and EU green bond standards, but I have made a comparison of the three. The green bond principle, EU green bond standard, and Taipei Exchange sustainable bond standards. So basically, Taipei Exchange standards are follows the principles from EU GBS and GBP. There are just a few differences, like let me see. Some are like the issue type are the same. Maybe the bond types, okay, a little different, and the user proceeds at I think Taipei Exchange standards has broader scope of that. Okay. And I also have prepared some examples of green loans and green bonds in Taiwan. You probably have heard about TSMC, Taiwan Semiconductor Manufacturing Corporation, which is the #1 chip provider in the world. They have first time issued green bond in 2020. And the very first green bond issuance of Taiwan is in 2017 by the Taiwan Electronic Power Company. Okay. And TSMC has issued more than once for the green bonds. Also, because our environmental regulation aims to develop offshore wind power, so we have some foreign investors like Ørsted Energy issuance. I'm not sure how my pronunciation. This is a Denmark offshore wind power company. So this company issued a green bond in Taiwan, and they also invested in Taiwan to help us develop our offshore wind power. Again, it's in 2020 and 2019, and I believe there are more. Okay, so these are more examples of the green bond or green loans. So mostly these fundings goes to solar photovoltaic or offshore wind power or onshore wind power kind of projects. Okay, I have some data from Taiwan. So this is the issuing amount from 17 to now. The 2024 is still ongoing. That's why it looks lower. I believe it will be higher than the previous year by the end of the year. Okay, and this is the coupon rate. So most of the green bond rate is during 0.4% to 0.8%, and then 1.4 to like 1.8%. Not very expensive. Okay, this is issuance period. There are two numbers. The first one is the number of the issuance. The second number is the percentage. Okay. So for example, among all types of the green finance, that green bond is 59%. There are 90 issuances. Okay. And social bond is 18%, and there are 27 issuances. Also, this is the plot for the total bond issuance amount, the light green line curve, and then the dark green is the renewable energy production. And this is bond issuance amount and renewable energy share. This is CO2 emissions for Taiwan and the OECD countries. So as you know, the Taiwan's CO2 emission per capita is quite high. Lithuania is low. It's here, somewhere down here. Here. Lower is better, right? Okay, and this is a fossil fuel energy consumption. Taiwan's in the middle. And PM 2.5 air pollution, Taiwan's high. Lithuania is in the middle. Renewable electricity output, Taiwan's a little low. Our goal is to have 20% of the renewable electricity output versus the total output by 2025. And now we are at about 10%. Still a lot more to go. Okay. The last two things I like to talk about is related to the tax policy. So we have feed-in tariff. Feed-in tariff is the policy tool to promote renewable energy by offering fixed price and long-term contracts, usually 10 to 20 years, for the production of renewable energy. Okay, so the government, okay, will purchase the renewable energy production based on a base price and plus a percentage, okay, depending on the kind of the renewable energy. And it has a wholesale purchase methods, which is to increase the motivation for the companies to develop or to produce renewable energy. So this is our feed-in tariff, FIT. Also, the policy goal is to encourage investment in renewable energy facilities, okay, reducing the resilience on fossil fuels. Okay. And the few key points for these feed-in tariffs are the electricity price setting, contract period, price mechanism, and types of renewable energy promotion. Okay. Okay. And the second thing I like to cover is Taiwan carbon tax. The most important thing I like to bring here is we use carbon tax instead of we use carbon fee instead of carbon tax. The main difference is the carbon fee is collected by the Ministry of Environment, while the carbon tax is usually collected by the Ministry of Finance. So the Ministry of Environment, which collected carbon fees, will use these revenue to whatever the environmental projects that Ministry of Environment thinks they should do. Okay, it's a little different to be collected by to call it carbon tax or carbon fee, and in Taiwan we use carbon fee. Okay. So so Ministry of Environment is the one that collect carbon fee. Okay, and we have a few regulations on this. Okay. I think okay. And to collect the carbon fee, we have a few draft, which I mean, it's an act, but not it's just like the draft means it's not a formal act yet, but we are working on that direction. Okay, so we have regulations governing the collection of carbon fees. And also we have designated greenhouse gas reduction goal for entities subject to carbon fees and regulations for administration of self-determined reduction plans. So all these drafts guide the
Professor Chan, sorry for interrupting you, but unfortunately the time runs quickly and you have only 1 minute left. So please finalize your very interesting presentation. Thank you.
Thank you for reminding. Okay, then I will go directly to my conclusion. Okay. From this research, there are empirical investigation parts. However, I think it's not that empirical investigation does not fit the theme of this conference. So I skip that part. I focus more on the regulations, policies, and text. So I'd like to conclude that the technological innovation are a crucial component of the green economy transition is based on the empirical investigation. And also from the data and from the regulations I talk about, EU can be the role model for Taiwan in the advanced development of wind power technologies. Also, financial markets of Taiwan should be more open and welcoming to international investment because we are small, right? Taiwan should be included in any global against greenhouse gas emission projects. This is my sincere hope. The last one is Taiwan can support EU Green Deal and contribute our advanced technologies in the related fields. Okay, thank you for your listening. And if you have any comments or suggestions.
Thank you.
Please.
Thank you very much, Professor Chen. And now we can move to our Q&A session. We have several questions here, and I will read. Most probably the first one is for Professor Schneider. Professor, are you with us? Professor Schneider? Okay, maybe we can we have question for all presenters, so maybe we can move to Professor Kowalski. Professor Kowalski, are you with us?
Yes, I am.
Excellent. Thank you. So the question for you, in your opinion, tax sustainability issue should be solved locally, nationally, or globally? How effective is the global approach?
Thank you for that question. So I think should be solved internally and globally. But of course, we have to do it in the according to the European Union principles. Of course, Poland and Lithuania are member states of the European Union, and we have to follow the rules. But according to them, we have to prepare our own regulations, for example, especially the ecological tax preferences, because, for example, we cannot change some ecological taxes like excise duty. But however, for example, Poland can change and amend the tax on transport of the vehicles, because this tax is locally charged.
Thank you. The second one, can the introduction of some new financial burdens related to sustainability have impact on the size of shadow economy? What is your view on that?
I am not an expert of shadow economy, but maybe the Professor Schneider will be the excellent person who can answer that question.
Okay, thank you. So then the last one for you. Do you think that the separation of administrative courts from the common courts is justified?
A good question. I don't know if it's in Lithuania you have a separation common court from administrative court, but in Poland we have this kind of solution from the late 90s. So I think it's a good solution, but we don't have any in our legal history alternatives. But administrative court judges in Poland are one of the top lawyers and they are also professors of the law. So I think that our administrative court system are on it's on a high quality system. So I think it's the best to keep them separate.
Thank you, and the following. Thank you very much. Thank you for indeed. And the following question, I think, is for Professor Schneider. Professor, are you with us?
Yes, I'm with you all the time.
Let me read it for you. What is your opinion about connection between tax evasion, tax avoidance, and shadow economy? How all these three elements are connected?
All three elements, tax evasion, tax avoidance, and shadow economy, are very strongly connected. If a lot of tax evasion happens, it is connected with the shadow economy, because shadow economy activities in almost all cases, by definition, create tax evasion. If I work in the shadow economy, I don't pay taxes. Only those people who do not pay taxes at all may, there might be no effect. But in general, there's a very strong effect between tax evasion and the shadow economy. Now, tax avoidance is the legal measure to pay not taxes. If tax avoidance is very generous, then people work more in the official economy and less in the shadow economy, because they do not have to pay as much taxes as they would have to pay if there would be very strict rules or very high tax rates. This is one problem of the Scandinavian countries, with quite high tax rates. So also there is a strong connection between tax avoidance and the shadow economy. The more generous tax avoidance is, the less is the shadow economy. And the more generous tax avoidance is, the less is the incentive to evade taxes. That's my answer, to be short.
Thank you very much. The second one, is there any acceptable size of shadow economy?
This is a very good question I always get when I present figures. The question should be, is there an optimal size of a shadow economy? Because as I said, shadow economy creates extra value added or extra GDP, and up to a certain range of a shadow economy, the tax losses are not, and social security payment losses are not so large that a government is really hurt. But one could make a rule of thumb, a shadow economy bigger than 20% or 15% has more damage to the official economy and especially to the state authority than a shadow economy below this line.
Thank you. And one more. Which policy measure, in your view, is the most important and most often ignored? Thank you.
Again, a very good question, and a question difficult to answer. Quite often, policymakers do not see that a shadow economy has also positive sides, like it creates an extra value added, like it gives jobs and extra income to poor and middle income people. So these are positive effects. These effects are difficult to obtain because if you be too generous to shadow economy activities, you will have other disadvantages like tax losses. And a much more important thing, if I know my neighbor doesn't pay taxes and works in the shadow economy and nothing happens to him, the incentive for me is very strong to do the same. So it's not so easy that one just can tolerate, a bit of a shadow economy is no problem, because it shapes the mind of people, because they realize that some people can work in a shadow economy and nothing happens to them, and then we will have a spread up effect to a lot of other people. So yes, this is a problem, and for a government, if a government deregulates, if a government tries to lower taxes, would be the best policies to reduce shadow economy and to create incentives them to shift the shadow economy work to the official economy.
Thank you very much. Professor Shen, as well, I have a question for you.
Yes. Yes, I'm here.
Yeah, thank you. The statistics you presented at the very beginning of your presentation comparing GDP with green financing shows quite a big difference between different countries. What do you think is the reason for this?
I think for this kind of green finance development, each country has very, very different ideas. Some countries that has more naturally resourceable, that is usually easier to develop their green projects. So that I think I just started the project a few months ago, so I didn't have enough time to cover all the countries. But from my point of view, I think for some countries that it has natural resources, that it's easier for them to develop their green projects so that there's more opportunity for these projects to get financed. And for countries like Taiwan, we have very little natural resources. So all of this development depends on our technology. So I think that's one of the reasons that for some countries that the green finance market is small.
So thank you very much. And unfortunately, we run out of time, and we need to move forward. Once again, thank you very much for the speakers of this first part of the conference, specifically for the discipline, and thank you for the questions. Once again, I would like to remind you that you can post your question on Slido. There's a code, QR code shown on the screen. So now, with big pleasure, I am passing the microphone to a colleague of mine for the second part of the conference. So thank you very much, and have a nice day for everyone.
Thank you. Thank you. Goodbye. It was a very wonderful experience. I thank for the invitation.
Thank you.
Labadiena, esu Gvida.
Hello, I am Gvida Vanauskina, and I'm the moderator of this part of the conference. And if during the first part we talked about global issues, now we are going to be transferring to the local, focusing on local issues, of course, talking about the European Court of Justice and EU initiatives. And I would like to once again encourage you to pose questions anonymously or otherwise. And this is your chance to use the Slido app. And first, we'll hear from our first presenter, Professor Dr. Gediminas Žubalis, partnership at Vilnius University and president of the Regional Administrative Court. He'll talk about corporate tax in the EU, tax sustainability. I'm not going to be and let me quickly find my slides. So I will briefly introduce the content. I'm going to discuss what is sustainability and how we should understand it. And then we'll talk about the taxes and how do they play within this topic, and we'll focus on corporate income or corporate tax. So first about understanding sustainability. This term is being used quite widely, and we've all probably talked what could be sustainable and what not. So we understand that the definition is very wide. And briefly, this phenomenon of sustainability, it started in 1987 or so. And we heard that the current generation should develop so they would not stop the future generations from meeting their goals. So we have to keep that in mind, and it usually involves three elements: people, planet, and profit. Of course, we usually relate the term sustainability to environment and environmental protection, but it also has the social perspective, not only environmental. So the sustainability definition became even larger, and the social perspective also includes aspects of inequality, equality of opportunity, the right to basic needs, food, health, etc. And more generally, it can also be perceived as a balance between benefit profits and the common goods that are important to society and the world as a whole. Now, how do we understand it on the level of the European Union, and what are the key measures? The EU understands sustainability having three key aspects based on ESG criteria: environmental, social, and governance. So we have three elements. And without talking too much, but we talk about the sustainable funding, financing, and thinking how to attract funding to sustainable activities. And it's especially relevant currently when we heard the regulation for ESG rating, and companies have to submit their reports on their greenness, and also the bonds and taxonomy directive, if you're interested. So these are activities that support sustainability. So what do we still need? We don't see a tax. So we have sustainable financing, and it's not related more to tax rather than public funding portion. And of course, the key document and the key issue is the Green Deal, but it's more an environmental issue. And European Union aims to become zero emission until 2050. And also the EU has set to tackle climate change and achieve a 55% reduction in the greenhouse gas emission by 2030. And out of 1.3 trillion euros, or one-third, investments to use for the next generation EU recovery plan. But the taxes are not in the plan, so implicitly we could probably think that it's a part of the EU fund. So talking about the tax part, where is this tax part? Probably the Green Deal funding system is very decentralized and fragmented. And the Commission also describes green taxes or environmental taxes are focused on energy, transport, and pollution. And it's a part of a price element, taxing either subjects that can be bad for the environment. Epigovian taxes that basically put the burden on the players that pollute. But mostly the taxing is left for the discretion of EU member states as instruments to achieve objectives that EU member states had set. And this is pay-pays principle, also management of waste. And we have several different directives from which states can introduce their own taxes. For example, our pollution law has some elements of the packaging management directive and battery management directive. So there is no system that would regulate very clearly what sort of taxes could be attributing to the Green Deal. Some taxes are controlled by the EU itself. It has green or energy taxing directive, but the system in itself is rather fragmented or decentralized. So what is the role of the tax? And the role is being discussed. As I said, the system is very fragmented. So first, we do have green taxes that contribute to environmental criteria. And the second criteria, which is social, it could be as a part of the social criterion. And the system itself needs to ensure certain fairness or equality, and it can be a part of the governance as an aspect. So in this respect, we could also mention the obligation to submit reports on corporate tax collected in different countries. So it's the country reporting. So it's a matter of discussion whether it's an effective measure, but sometimes it's being said that big companies who plan their taxes very carefully, they will continue doing so, and others will not pay as much attention. So how do the taxes affect the ESG criteria? First of all, green taxes are mostly environmental, so focused on transport, energy, resources, and they could probably not be called exactly taxes, but an element that internalizes external costs. So if we have a tax that's traditionally doesn't have a direct effect of such, they can be used to change the behavior of people, and these taxes usually focus on the key needs of people, and therefore they have a big element of regression. And therefore they can affect negatively the quality of taxing. And this could probably make more prominent the Green Deal policy and practice, which seem divergent. For example, during the energy crisis, energy is one of the key resources, and then there is an excise on top, and we saw some tax advantages for electricity applied in some countries. So we had such a disbalance. On one hand, we tax the energy. On the other hand, we try to find ways to make it cheaper. And green taxes also have such a element that if we tax pollution, and EU obligates until 2050 to reach zero emissions, the base would continue reducing and would disappear all in all. So what is the role of corporate tax? And I would like to start from the question, why do we need corporate tax at all? And we should probably agree that in the doctrine we don't have a discussion that corporate tax is nothing else but taxing of earnings on the level of corporations. So it's very similar to personal income tax. So we don't have an artificial instrument on top of it. But very briefly, I would like to explain what it resolves. So first of all, it allows for non-personalization, non-individualization of the level of tax at this level. And the state is happy for the company to do part of the administration, and the company enjoys the lack of detailed personalization, which is good on one hand, but probably the simplicity of administration is the essence of why it's attractive. Secondly, the state, especially the source of the income, also can very quickly take from this foreign capital company a part of the profit earned in that jurisdiction, which is attractive to the state. And thirdly, in the formative phase of the corporate income tax, one of the incentives of its emergence was the problem of the so-called deferral or tactical timing of the payment. So it's a sort of a tactic to take the profit early, and it can be artificially accrued in the company. So basically, it was established to ensure more fairness. And fourthly, it's another trait which is on standby regime. During the First and Second World Wars, it was used to tax the surprofits, so to speak. So over the war, especially in monopolized markets, some companies earned big profits, and the principle was nobody could earn from war. So these taxes on this surprofits were very big, and probably the reaction was fair. And if we go back to these prehistoric times, so historically, profit tax was used as such a measure. And it was always there and is still there. That could be used for such surprofits or over profits. And sometimes it is used, for example, in the banking sector. So in summary, I could probably say that corporate tax among the ESG criteria contributes to the social element as an input to ensure some more fairness. Can it contribute to the environmental criterion? Probably yes. But such contribution would probably come through certain rules, tax advantages, tariffs, but probably in practice we would say that the focus would be on more sustainable mechanisms, so easier amortization or something similar. But I would be probably skeptical as well that it's in principle not very good when political objectives are attempted to be achieved using taxes. And usually we see that nothing good comes out of it. So in my understanding, the principle is this taxing system needs to be as fair as possible, and if we cannot achieve our objectives, otherwise we need to make changes only then. And very often tax advantages for resources, they could be, for example, distort fairness in the system. And taxpayers could actually suffer. especially those who have less resources to invest in sustainable possibilities, equipment, and so on. The European Commission and in general, it's relevant what is the ratio between work tax or workforce taxing and capital taxing. And taxing different types of earnings, and especially in relation to workforce. So in general, there's some criticism for the differences between the taxing for labor-related earning, taxing, and other types of earnings, for example, from dividends. And these capital earnings are not as heavily taxed. And we have a difference marked on the slide. And we can see the progressive taxing in the high earnings end. But if we compare it with dividends, which uses 0.5 tariff, this is a very big gap. And if we compare the average income from labor to higher tariff, the gap is not as large anymore. Of course, we need to consider that in labor taxing, we also have a part of social contributions. And yes, we do have certain reasons and arguments why capital taxing and profit taxing could use a smaller tariff, smaller rate. Firstly, because capital and its rate has normal return, interest on investments. And if you imagine you invested 100 a year ago, you now received 10 euros more. It's not probably earnings, it's probably the compensation for inflation. And another argument is motivation or economic benefit objective, saying that lower taxing would have a lot of motivation to invest. But that's a separate discussion because we don't have a lot of evidence. On the other hand, I wouldn't say that there is no relation, but authors have noted that in certain areas, within certain tariffs and types of investments, we could see probably some advantages of such measures. But if we talk about 15 or 20% of tax rate, it probably would not affect investments very much. And talking about corporate tax, it's relevant when we talk about green taxes. We talk a lot about the Green Deal, about green investments, green financing, and it seems that for all member states, the #1 objective should be changing the balance between taxing the earnings from capital and from labor, but it appears that environmental taxes show a declining trend. So corporate tax remains relevant and necessary. And from a small tax that 2002, it didn't even have 1%. It's 2.2 now, but it's still among the lowest in the EU. And the EU is trying to make initiatives to reform this tax, the corporate income tax, the BEFIT initiative. And I believe this contributes to more clarity, and probably this base could be globalized, and member states could also apply tax credits on it. Thank you very much. And next, I'd like to introduce our next lecturer.
Malonu pristatyti buvusiai.
It is a great pleasure to introduce to you my long-standing colleague and advisor to the large taxpayer monitoring and consultation department of the State Tax Inspectorate, Maria Jankauskienė. She has an extensive background in the working group on binding rulings. She's a true professional in this field, so her topic today is binding rulings and problematic aspects. Maria, the floor is yours.
Matom dabar, taip. Labą dieną.
Good day, I'm Maria Jankauskienė, and today I'm going to speak about the binding rulings adopted by the tax administrator, because I work in the working group that considers requests for ruling bindings at the State Tax Inspectorate, and I participate in the consideration adoption of ruling of the binding decisions and rulings. Binding rulings in Lithuania have been applied for quite some time, and the tax administration law establishes this institute, and it established it in 2012. Binding rulings is one of the measures to coordinate the approach towards taxes between the taxpayer and the tax administrator regarding the future transaction intended by the taxpayer. So this institute and the ruling adoption process focuses on the prospective time. This means that the object of application, which is an economic transaction or transaction in relation to which the binding ruling is requested, is intended to be implemented in future. The procedure is initiated with the taxpayer's application to the tax administrator. There is an established template of the application. In the application, the taxpayer has to state very clearly the description of the transaction, reveal all the circumstances that are important for the transaction and taxation, including the parties, the period, the practice, and uncertainties related to application of tax law. The taxpayer should also formulate very clearly the intention of the application and the tax provisions that, according to the taxpayer, should be applied to the transaction. There have been cases where taxpayers have requested the tax administrator to agree that there are no tax consequences of the transaction. This is very not specific, and the applicant should refer to specific provisions in the tax administration law, as the binding ruling is formulated in the way as to agree or not to agree with the application of the provisions referred to by the taxpayer. If the tax administrator agrees with the tax provisions that should apply to the transaction, if there are any inspection procedures in the future, the tax administrator undertakes to follow the provisions during the inspection that are included in the ruling. Speaking about the permanent working group, it is important for the integrated assessment of application of different tax law provisions. For example, if the tax-paying applicant applies for reorganization in a company, then it is not only the corporate income law, but also the, for example, natural person income law that applies. If assets are being sold, then it is not only the corporate income tax, but also the value-added tax law that applies. So in order to provide the most possible objective assessment of the application and to pass the integrated ruling, there is the working group that it consists of two subgroups. These are people with extensive experience in education, tax disputes, tax consultation, and taxpayer control. In this context, I would also like to mention the international information exchange between the tax administrators. In case a positive binding ruling is adopted and it contains an international component, these rulings are sent to the foreign tax administrators, and we as the tax authority also receive those from abroad. And the purpose of the information exchange is to identify and minimize tax risks and to identify potential tax risks in the country of residence of the taxpayer. On this slide, you can see the statistical information on the number of applications, on the number of rulings, on the applications not considered, and applications sent to foreign tax administrators. The most interesting probably case is the case where the tax administrator does not consider the application for a binding ruling. This case may happen when, for example, the application does not fall within the mandate of the tax administrator, such as, for example, the derivatives. And taxpayers sometimes ask the tax administrator to decide that the instrument, the financial instrument, is a non-taxable derivative instrument. Or, for example, if the transaction has been completed before the application date. In all cases, taxpayers are consulted and any questions can be dealt with. Binding rulings are adopted on all tax-related issues. Very relevant topics include share exchange, goodwill, interest costs, allowable and limited deductions, capitalization options, warrants, share transfer to trust funds, and all other issues related to taxes. And the binding rulings are adopted both under the request of legal and natural persons. Binding rulings are not adopted or considered in relation to tax amounts and other estimates. In terms of the institute of a binding ruling and its nature, even if we read the tax administration law prospectively, it is important to coordinate the position of the taxpayer and the tax administrator in unclear and disputable issues. But in practice, there are situations where the taxpayers approach tax administrator for consultation. And even if taxpayers are very clear about the provisions of the tax laws, and even when there are different examples shared by the tax administrator, and even if there is a case law in Lithuania, the taxpayers still apply for a binding ruling, probably believing that the tax administrator might change their position that was expressed during prior consultation. And foreign countries also follow these procedures, such as, for example, Denmark, Germany. They adopt ruling bindings in relation to unclear transactions that have considerable financial consequences. Of course, there are no discussions about the binding rulings that agree with the request of the taxpayer. But when does the tax administrator pass a negative ruling binding in relation to the application of the taxpayer? Probably the most common reason behind the ruling not to agree with the requested assessment of the transaction is when the interpretation of the provision in the application is contrary and contradicts to the provision of the law. In these cases, when the tax administrator believes that the interpretation of legal provisions indicated by the taxpayer in the application, the tax administrator will not pass a positive binding ruling in relation to the transaction. The following circumstances are also set out in the order of the Supreme Administrative Court of Lithuania. And it says that tax administrator can pass a negative ruling binding in cases where the circumstances in the application are not complete, clear, and they are unambiguous. And if there is a hypothetical transaction and the future transaction is not specific. There are cases where an applicant for a binding ruling in relation to structural changes in a company, and the taxpayer asks for the ruling that supports the economic viability of the changes. Or if a holding structure is being introduced and the tax administrator is requested to agree that the content of the holding is sufficient. In this case, we ask to revise the application to refer to the specific transactions and economic operations that the taxpayer intends to implement. And after this information is clarified, and all the circumstances about the transactions are clear, then the binding ruling is adopted. Unfortunately, there have been cases when the content of the application and the circumstances show that the transaction or chain of transaction is intended for tax benefit. In all cases, when we analyze the application, the tax administrator assesses both the information available at the State Tax Inspectorate on the specific taxpayer and, as I have already mentioned, where the transaction structure seems to comply with certain provisions, but the transactions as a whole in a group of companies, these transactions form the chain that lead the tax administrator to conclude that the taxpayer seeks tax benefit. There have been quite a lot of discussions on the legal consequences of the binding rulings, and the Supreme Administrative Court has ruled that the binding ruling has an impact on the rights and legitimate interests of the taxpayer. Therefore, the assessment of the legality and reasonableness of such a decision is a subject of the administrative proceedings. The question is whether or not it is a tax dispute. There can be different considerations. However, from the perspective of the tax administration law and the definition of tax dispute, it should be noted that the binding ruling does not establish any tax liabilities for a taxpayer, and the binding ruling is not mandatory for a taxpayer, and the taxpayer can choose to not follow this ruling. So positive binding rulings are not absolute. It is not a rule of thumb. And there are cases where the tax administrator can pass a negative binding ruling. For example, when it appears that the taxpayer has provided incorrect, inaccurate, or incomplete information in the application. The actual circumstances established during the inspection did not correspond to the circumstances indicated by the taxpayer in the application. The situation can be the follows. For example, when the facts established show that the transaction was intended for tax advantage, or, for example, the transaction in respect of which the ruling is sought was completed before the date of application. And this is the practice of other countries in relation to ruling bindings. As you can probably see, in the majority of countries, binding rulings are adopted on all topics related to taxes. However, only in relation to specific difficult situations or situations that cause considerable financial and tax circumstances, and when the transaction is intended for tax avoidance or tax evasion, or the questions or application is too vague, in these cases, tax administrators do not pass positive binding rulings. In the majority of countries, this institute is available for a certain fee, and when taxpayers apply for a binding ruling, they have to pay the fee that may range from 100 to 20,000 euros, and it depends on the value of transaction, on the company turnover. In Romania, for example, it also depends on the size of the taxpayer. Thank you very much for your attention. Thank you, Maria, for the very practical presentation as the Institute of Binding Rulings contributes to tax certainty.
Komisijos narė Jurgita Narkevičiūtė.
And next we'll hear from Jurgita Narkevičiūtė, member of the Tax Disputes Commission and PhD student at Vilnius University, and she also touches upon subjects of tax sustainability, and she'll talk about allowable deductions. Hello, everyone. When I was little, we had an exotic plant in our apartment, a palm tree. Currently, everybody has such trees in their yards, but you'll probably agree that the weather is changing and we should not close our eyes towards the fact. And together, during my presentation, I will examine whether the allowable and limited deductions of the Lithuanian corporate income tax law, which reduce tax profits, could contribute to effective tax sustainability and certainty based on successful example. I also aim to answer the question whether the revision of legislative provisions to restrict direct taxation in the light of the European Union's objectives in the field of taxation, including environmental objectives and the state's obligations, can inspire legislators to change the established approaches. First, we need to remember what happened in the past, but over the previous decades, member states have been changing their taxing systems, and the EU has always been regarded as the initiator of current taxation systems. Therefore, the EU is starting with the progressive tax, and Scandinavian countries started collecting environmental taxes, and international taxation can be tracked back to the establishment of the League of Nations. So we can see different taxing systems, and this very much relates to the matter of national sovereignty. Direct taxes, including corporate tax, are the responsibility of member states. And according to the International Tax Competitiveness Index for 2023, Lithuania is ranked 9th ahead of Estonia and Latvia. Currently, we'll hear the data for 2024, and we'll see our realistic situation. And the corporate tax is number 3, we could say, and in the entire competitive fight, we are behind Estonians and Latvians. So we are number 3. But of course, probably we should not compare these corporate tax systems because they go by different principles. And after familiarizing myself with the 15 principles of deductions, I would like to mention a few core interesting differences which are not applied in Lithuania. For example, Czech Republic goodwill is written off for tax purposes only if it was created by the acquisition. Businesses are part of a business, and they can carry forward and backward the tax for 2 years. And Slovenia's case is especially interesting if the company has at least one person fully covered by compulsory social security for at least 9 months, and if the company has income exceeding 50,000 euros subject to one-off deductions of 80% of annual income, and final income between 50,000 and 100,000, a deduction of 40% of the annual income applies. and no deductions of annual income exceed 100,000. In Sweden, they can carry losses back. In Switzerland, interest paid on loan capital, which has the economic characteristic of equity, is not deductible, and the allowable amount of debt related to certain assets, such as 70% shareholding and 70 to 80% real estate, can be reclassified as shareholder dividends, and cantonal and municipal taxes are similar. And if a company is loss-making and registers to another canton, and they can also bring their loss. And the Turkish system was very surprising. It's very wide. And one of the things that drew my attention, and probably it's not under the thin capitalization rule, but when a company is loss-making, 10% of the financial losses are non-deductible unless it has a credit or loan. So if we talk about the restructuring of the current tax legal system, we need to relate to the Republic of Lithuania's restoration of independence. When we started going to the free market economy, and new businesses were established and profit-making. And if we go back to 1990s, Lithuania has the new law, or the law on corporate income tax, on legal entities, and a legal entity was had to have taxable profit and had to deduct it from gross receipts from the annual elements of the cost of production and circulation, as well as the cost of the realized production. And there were also, in 1990, certain provisions related to environmental protection. So looking at the first draft, we could understand the difficulties of the state back then, and all these limited deductions were related to culture, education, and the progress of the state. In view of the growing academic literature on the tax issues surrounding the application of the second pillar, it should be recalled to the EU adopted instrument or directive of the 14th December 2022, Council Directive on the global minimum level of taxation for multinational enterprise groups and large local enterprise groups in the Union. In Lithuania, we have not very many of them. But the trend is observed that when we talk the effective corporate tax, a lot of effect is observed from tax credits. And in Lithuania, if we calculate according to different data, it amounts to 12.1 to 12.7%. Therefore, we can raise a question that the undersigning countries, and we are a part of the Pillar 2 as a country, corporations will not be able to apply tax credits, or bigger tax will apply. And looking into the future and about the benefit system, the same principle and the guidelines is under the second pillar or pillar 2. And benefit system in Europe will aim to tax all legal entities. So under all the same principles, we'll have to draw our attention whether tax credits in the law will be applicable and whether the taxpayers will be able to use this possibility. From the very beginning, I would like to raise several issues. The first issue, and probably I don't have to go back to it, is the sovereignty of the state. and the only issue is that the states gave it back to BPO and G20 because they regulated the agenda and the issues relevant. And my question is how much Lithuania has been heard and could have been heard. Is it the best decision to give the entire regulation to the EU? I'm going to try and answer while I'm going to mention my conclusions, but talking about the trueness of the tax, I would like to say that this principle is very important for the current taxing system and the case law and European Court of Justice case law. And the first time mentioned it was in 1961, and we still have this principle quite relevant. And yet another principle which is only applied in European Court of Justice cases. And the number 4 dilemma, I would like to draw your attention to the question whether we should have the right of the estimation, the taxpayer's right of the established tax credit. So I would like to go back to the case law of the Supreme Administrative Court, because in the law we don't have the differentiation between the right of the taxpayer and the credit. And the credit is explained very narrowly, and rights could be much wider. So this principle needs to be revisited by lawmakers in order to have the guidelines. And now if we talk about not deduction but tax credits, according to 2023, the budget is losing quite a lot from the budget, and this would be even larger if we include the allowable deduction. And going back to the beginning, what I talked, I would like to go back on the ability to use the tax credits and whether we need to revisit the tax system in order to redefine what are the allowable deductions and to go back to the institute. The national regulation shows that we have 3 types. When we have deductions in full, only a part of the deductions, and deductions more than those incurred. So according to the administrative court case law and our commission's case law, we can see several criteria on how costs could be treated. They have to be actually incurred, costs incurred in the course of the unit's commercial or production activities. The cost must be in the ordinary course, and cost should be necessary to earn in units or in the subject company's income to obtain the economic benefit of the unit of the business incurred. And also, we need to pay attention that the costs could be based only on documents with legal force incurred during the reporting period. The burden of proof is shifted on the taxpayer, and the validity of formation income can be calculated indirectly, but this principle does not apply to costs. I recently read an interesting book when whether the taxpayers would gain the possibility to recognize their costs if the earnings were obtained illegally. In Lithuania, this principle is not going to be applied, and the costs would not be recognized. And I'd like to draw your attention to legal dilemmas. that when we talk about the clarity of taxing, we would really want to make sure that the corporate tax would have a better definition of costs, because in the financial because now the definitions are not as clear. And according to my understanding, in the corporate tax, these definitions should be specified, because not all costs are related to companies' activities, especially administrative costs, for example, for employees, which are quite difficult to be reasoned and based as related to companies' activities. And if we talk about the overall principle and seeing the relationship with activity, the tax administrator or tax authority, especially a lot of attention pays to evasion, and the researchers always question whether the evasion is clearly defined in laws, so that taxpayers would clearly understand what is considered allowed and what is no longer allowed or illegal. So we would always want such clarity from tax authorities. And if we look at disputes in Lithuania, would like to draw attention that the majority are related, unfortunately, and we need to recognize, with shareholders' life at the expense of the company. They buy cars, apartments, helicopters, and other things, trying to say that it's related to the company's activity. And a short analysis of cases, and I would like to talk about thin capitalization, balancing between fiscal autonomy and international regulation. Talking about thin capitalization, we have a big problem in legal regulation, and we don't have clarity from the tax authority. First, Lithuania has the 4-to-1 ratio method, and tax authority and taxpayer have to establish where interest related to thin capitalization under the arm's length principle, and limits the proportion of interest in order to be exempt from the ratio method. The taxpayer has to provide evidence that a similar loan was made under the same conditions. So if we go back to thin capitalization, we can see that disputes at courts in relation to thin capitalization, we had some in 2015, 18, and 18. We have 3 court rulings, and in these rulings, there was a failure to resolve the issue on whether the additional condition applies to the taxpayer if we are above the 4-to-1 principle, and when the tax authority should actually prove the or attempt of the evasion on the part of the taxpayer. So then we have a big period of time, and we start inspecting in 2022, when the tax legal basis remains the same. And the decision is related to the, has been passed related to the own capital. Talking about goodwill amortization, the tax authority mostly looks at the relation with economic activity, and we also have some issues with legal regulation, and there's also a draft submitted, and the problem is being resolved. talking about the losses. I'm being indicated that I don't have a lot of time to continue. You could probably ask me about my topic about sustainability, but I am of the other position, and I believe that we can resolve it through allowable deductions with coefficients for sustainable goods and services. So if we buy sustainably, we can use it, and our activity is sustainable. Two institutions could agree on coefficient, and then the corporate tax tariff could be reduced via the principle of allowable deductions. Thank you very much for the attention. Thank you very much. This is probably also the defense of the dissertation. She is soon to become a doctor. And next, I would like to invite Auditor Gintaras Juškauskas, and he'll talk about carrying forward the loss and Cheshire cat. So maybe we'll hear something interesting about cats.
Dear conference participants, my presentation will focus on tax loss carry forward and the Cheshire cat paradox. What's with the Cheshire cat? Well, it is that after the case law of the Supreme Administrative Court of the Republic of Lithuania, which I will be discussing, tax losses have become the Cheshire cat. They are there, but when they're carried forward, they suddenly evaporate. Let's start from the beginning. The tax loss carry forward institute, as it is in Lithuania under the corporate income tax law, provides for 2 tax periods. In the first tax period, tax losses are generated. They are generated by calculating and declaring them on the corporate tax return by declaring taxable income, deducting the allowed limited deductions, and calculating the tax loss on the return. And we have a second tax period to which the taxpayer carries forward the losses from the previous period. In this current period, taxable income is also recognized, allowable deductions are deducted. The limited allowable deductions, which include the corporate income tax carried forward, are deducted, and the taxable profit is calculated. Tax loss carry forwards are subject to special conditions and a sequence of loss carry forwards. It is possible to carry forward losses on a FIFO basis, first in, first out. A maximum carry forward permitted is 70%, and an unlimited number of carry forward of losses from ordinary activities is allowed, and special cases in which the carry forward of tax losses is terminated. This is the regulation. Let's now move on to the tax dispute, which is the subject of my presentation. The case of the Supreme Administrative Court of Lithuania, you can see the number. This was Liksita versus the State Tax Inspectorate. The dispute arose precisely in relation to the carry forward of tax losses calculated and declared by the taxpayer in the corporate tax returns for the years 2005-2006. The tax loss calculated and declared for the mentioned years in the tax return acquired legal stabilities. Why so? Because these tax returns are subject to the statute of limitations in this dispute, and Article 73 of the law on tax administration of the Lithuania presumes that the data contained in the tax returns are correct. So, 2005-2006 corporate tax returns, statute of limitations applies, and tax loss is declared. In 2012, 2013, 14, and 15, the taxpayer filed a corporate tax return for the following periods, and the tax losses were carried forward from the years 2005-2006. The tax loss carried forward was recognized as a limited deduction for years 2012-2015 and reduced the taxable profit for those periods. The returns are then filed with the tax authorities. The tax authorities initiated a tax audit for the years 2012-2015 and challenged the validity of the carried forward tax loss. Why? Well, the State Tax Inspectorate asks the taxpayer to justify the calculation of the tax loss carried forward, specifically why interest expense in 2005-2006 reduced the taxable result for the years 2005 and 2006 and increased the tax loss, and whether the interest expense was justified. They also asked for documentation on the recognition of the interest expense as an allowable deduction in the income tax returns for years 2005-2006. The taxpayer did not agree. They said that the tax returns of 2005-2006 were subject to statute of limitations, did not provide these documents to the inspectorate, and the tax inspectorate did not recognize the losses carried forward. Let's move on to key issues in the dispute. Have the corporate tax returns for the years 2005-2006 declaring losses acquired legal stability? Is the taxpayer carrying forward tax losses from years 2005-2006 obliged to justify those losses anew, given that those losses were calculated and justified in the returns for the years 2005-2006? Have the tax authorities infringed the statute of limitations rule for tax reassessment and the principle of legal certainty? How should the tax losses carried forward be justified in order to reduce the taxable profit for the current tax period? Lastly, did the tax authorities go beyond the scope of the tax audit? I would like to remind you that the audit was for the years 2012-2015, but the issues raised by the tax authority related to the recognition of allowable deductions for the years 2005-2006. And we have some very important fundamental issues intersecting in this case, rendering this case professionally extremely interesting. First of all, the principle of legal certainty, from which follows the statute of limitation rules for tax reassessment, the rule of legal stability of the tax return data, which is established in Article 73 of the Law on Tax Administration. The linguistic and systematic interpretation of the provisions of the law on corporate income tax is also relevant in this case. The principle of equality of taxpayers enshrined in the law on tax administration is also relevant. Another relevant issue is the principle of legality, one of the cornerstones of public administration law, which requires the tax administration to act lawfully and only within the limits of its powers. The question is, therefore, whether the scope of the mandate to carry out a tax audit has been exceeded. Let's start with the question of whether the tax returns for years 2005-2006 have acquired judicial stability. In my opinion, there is no doubt that they have acquired legal stability as a consequence of the principles of legal certainty and the rule of statute of limitations. And in my view, the fact that the corporation tax returns have required legal stability means that they cannot be recalculated neither by the tax authorities nor by the taxpayer. In this conclusion, I also rely on the principle of legal certainty. The case law of the Court of Justice of the EU makes it very clear that, according to the principle of legal certainty, legal rules must be clear, precise, and predictable. That is the case here. The statute of limitations for tax reassessment makes it very clear that once the statute of limitations has become effective, the data in the returns cannot be reassessed, and it is presumed that the data are correct. The principle of legal certainty seeks to ensure the predictability of legal relations and requires the person's situation with regard to his rights and obligations vis-à-vis the tax authorities cannot be challenged indefinitely. This is where the institution of the statute of limitations on tax reassessment comes in. And it is the statute of limitations on tax that allows for situations in which the tax authorities are prevented from reviewing tax data indefinitely. The principle of legal certainty is also found in the case law of Lithuania, which is also a constitutional principle from which it follows that legal regulation must be clear, coherent, legal norms must be formulated precisely, they cannot be ambiguous, and this principle also implies that all ambiguities in tax legal regulation must be interpreted in favor of the taxpayer. Let's return to our question as to whether the tax returns, including the tax losses for 2005 and 6, have acquired legal stability. The Supreme Administrative Court of Lithuania has assessed the situation in a radically different way than I have. According to their assessment, these declarations have not acquired legal stability. Why? Well, the court's conclusion is simple. It says that if a taxpayer decides to exercise the right to read and carry forward losses from a previous tax period, the tax legal relations related to the calculation and declaration of those losses cannot be considered as having expired, and the corporate income tax return for years 2005-2006 cannot be considered as having acquired legal stability. Quite an original conclusion, I'd say. The exercise of the right to deduct losses in this case means that this rule has removed the statute of limitations on tax reassessment. Is the Supreme Administrative Court really right, or can the taxpayer, as the Supreme Administrative Court says, to carry forward tax losses? Article 30 of the Corporate Income Tax Law. As you read that article, it does not contain any right to choose whether or not to carry forward tax losses. Moreover, a systematic analysis of the provisions of the law on corporate income tax makes it very clear that tax losses are one of the items of the limited deductions. It is the element of the calculation of the corporate tax base. It is not a tax benefit. So, on what basis, then, did the Supreme Administrative Court of Lithuania reason that a taxpayer could choose whether or to carry forward tax losses or not? First of all, there is a legal paradox. An enlarged board of the court, in interpreting the provisions of the tax law, relied on an implementing legislation, which was the version of the rules for filing corporate income tax returns approved by the head of the State Tax Inspectorate. And one of the clauses in which it discovered that the taxpayer could decide whether to carry forward tax losses. So this is an interpretation of the law using an implementing legislation which contradicts the law. And another argument which I can see from the context is that Article 30 of the law on corporate income tax, Clause 4, has been taken, and according to the court, it also justified the possibility of choosing whether or not to carry forward. But this clause referred to a special rule about the carry forward of losses in time, not about the possibility of choice. So what was the basis for the tax inspector's conclusion whether or not the loss could be carried forward? The systematic analysis shows that this is not a benefit, but is an element of calculation of the tax base. It is a limitation on the amount of deductible losses allowed. Moving on. The issue of non-expiring legal relationship. The court said the relationship did not expire because the taxpayer had the choice of whether or not to carry forward losses. However, if we read the corporate income tax law systematically, we have the principle of the tax period. According to this principle, there is a single tax period of the year 2005-06 where those losses were incurred. And within that period, there were allowable deductions, the limited allowable deductions, and losses. And there is a completely different tax period of 2012 and 2015, where the tax losses were carried forward and became limited deductions, and were subject to different recognition conditions, including FIFO method, which says that losses incurred should be carried forward first. Then the 70% rule meant that no more than 70% of the losses could be carried forward, and so on. And in the same way for each of those periods. Different recognition conditions are also applied to allowable and limited deductions. Therefore, I believe that the court simply did not assess the provisions of the corporate income tax law. This leads to another question. What was the period over which the tax inspectorate inspected the taxpayer in order to justify the classification of the years 2005-2006 of interest costs as allowable? Was the recovery from years 2005 and 2006, did it have to be justified again? According to the court, since the taxpayer exercised the right to carry forward the tax losses, the taxpayer was then obliged to substantiate those losses anew, and the court also concluded that the returns for the years 2005 and 6, in which the losses were declared, have not acquired legal stability, nor did they acquire any legal stability prior to the rule of legal stability. But what is the condition of Article 30 of the corporate income tax law? According to the law, we only need to assess the aspects such as whether the losses carried forward were incurred in the first place, whether the 70% carry forward rule was exceeded, and whether the activity was continued in respect of the losses carried forward. In other words, from a systematic point of view, there are certain conditions for the recognition of deductible losses in years 2005 and 6, and different conditions in the years 2012, 2015. Thus, I think there should be no requirement to substantiate losses incurred back in the years 2005 and 6. So what is the point of this? Well, it follows that this decision turns the world upside down, including the whole practice of tax loss carry forward and more. Judging from the court's decision, I conclude that from now on, the norms of the law could be interpreted in the way or that the implementing legislation interprets it, and the implementing legislation in this case contradicts the law itself. It then follows that the constitutional principle of legal certainty, the statute of limitations on tax reassessment, the rule of stability of the tax return can simply be ignored if the taxpayer is exercising the right granted by the legislator to reduce the tax base by means of limited allowable deductions. It is a complete paradox, but such a rule follows from the ruling of the court. The court has successfully invented the rule of conditional statute of limitations related to tax. What is it? It does not exist in the law on tax administration, but it has been formulated in this case. It means that if a taxpayer calculates taxable profits in 2005-2006 in tax returns, which have acquired legal stability and which are subject to a statute of limitations, these tax returns have acquired legal stability and are subject to the statute of limitation rules. And neither the taxpayer nor the tax authorities will ever return to them. However, if another taxpayer calculates the tax loss in the same returns for the year 2005-2006, the state tax inspectorate may come back to those returns, require the taxpayer to justify how they calculated that loss, and recalculate it if the taxpayer chooses to carry that loss forward to some current tax period. So, we have a conditional statute of limitations rule which is not enshrined in the tax administration law, but which has been successfully established in the case law of the Supreme Administrative Court of Lithuania. How about the principle of legal certainty? How about the clarity of the law and the fact that all ambiguities should be interpreted in favor of taxpayers? The opposite seems to be true, with all uncertainties being interpreted in favor of the budget, in favor of the state. And the court has modified the principle of equality of taxpayer. The law on tax administration formulates the rule that all taxpayers are presumed to be equal in similar situations. In the present case, the taxpayers are not equal. The taxpayers who declare profits in their corporate tax returns are more equal than those taxpayers who declare tax losses in the same corporate tax returns for the same periods. Some are equal, while others are more equal. Why so? Because some taxpayers' tax returns have acquired legal stability and are subject to the statute of limitations rules, while others have not. Is everything fine here? I don't think so. In my opinion, the Supreme Administrative Court has established yet another flawed practice. The cornerstone principle of public administration, the principle of legality, says that when carrying out a tax audit, the tax administrator shall act strictly within the limits of their mandate, that is, to carry out the audit only for the respective period and not go into or recalculate any other periods that are not the subject of the audit. In this case, this principle of legality can be successfully discarded in the dustbin and completely ignored. It seems that the State Tax Inspectorate can recalculate the data of corporate tax returns which are not subject to tax audit and which are subject to the tax statute of limitations. In my opinion, Lithuania, willing to gain the right to inspect and examine tax losses with the statute of limitations already in effect, in view of the rule enabling the tax carry forward for unlimited periods, should have changed the statute of limitations rules established in Article 68 of the law. And Lithuania should have introduced something similar to what is available in other countries' legislation. For example, French law, referred to as conditional statute of limitation rule, where an additional extended tax limitation period is triggered by a tax loss. In the current case, the statute of limitations rule is an absolute, unmodified case law imposing a conditional limitation rule on top of the statute of limitation rule, creating additional legal uncertainty, causing imbalance of the relationship between taxpayers and the state, rendering the application of the tax loss carry forward institute itself uncertain. All uncertainties should be resolved in favor of the taxpayer, but in reality, it is the other way around. So, as the Cheshire Cat said, I'm not crazy. My reality is just very different from yours. Thank you for your attention.
Šios dalies pranešimus baigėme.
So we've finished with this part of presentations, and we still have some questions. First, Gediminas, how much profit tax reduces earnings from, and how could you compare different systems? The question is probably too wide and too complex, but also is very important. So I would probably start by saying whether there is a relation between economic growth and corporate tax. In research, we see that back in 2008 and 2009, there were some voices saying that the profit tax or corporate tax infringes the growth. Currently, we see that at least the general corporate tax has no effect on growth, and it's not the best regulation measure. And yes, there are some data, and we can use certain credits and preferences, but they have to be used very precisely, using the principle if it's well targeted and well calculated, the credit can work. But certain divergences need to be assessed in order to prove whether the measure is effective, which we fail to do sometimes, and whether it would be effective to equalize taxing from different earnings or from different sources, from capital, for example, with labor costs. And we should also consider social contributions, and I don't know whether that would have the effect, and maybe it would become equal only if we start applying social contributions to earnings from capital. And the question to Maria about your topic about added value tax and what issues are prevalent. Most requests and applications are related to corporate tax law. Talking about VAT, we do have some questions of financial services, whether services are taxable or not, and the location of service provision. We sometimes receive the VAT object transfer questions, or sometimes a landlord being sold together with buildings. Another question, the tax benefit derived from tax. Do you look where the benefit arises? It depends on the type of transaction. If the transaction takes place within the jurisdiction of Lithuania, then we'll look at possible effects of the taxing. But of course, if the transaction has certain elements being international, then and if the transaction has several different taxpayers from different countries, then of course we look at and assess effects on the wider, or consequences on the wider context. And for the financial transaction, for example, interest as allowable deductions, then we would also look at the way the topic is treated abroad. I see that we still have questions. Unfortunately, we have no time. So we would have enough time for lunch, and we'll come back at 12:30. And you could also respond to questions on Slido application in the field of VAT, and we can see how much do you know on the topic. So now lunch, and let's come back at 12:30.
Welcome back our lunch break to the conference broadcast, and welcome all those who are present here with us live. And this part of the conference will be dedicated to taxes, and our question and answer session will follow after our speakers. You can ask questions on the Slido platform. The code is 3312325, or you can scan the QR code. You can see everything on your screens. And since we are very conscious of time, I would like to introduce to you our first speaker, member of the Tax Dispute Commission and lecturer at Mykolas Romeris University, Vilma Vidžiūnaitė, and she will speak about legal certainty and sustainability of value-added tax. I would like to thank you very much for the introduction, and today I am going to speak about VAT. And I will be the only one to speak about it today, but it is the most important tax in the European and in the Lithuanian budget. Besides the social and health insurance funds, the VAT accounts for 41% of the total state budget. Our distinguished moderator has shared the Slido login details, and you can find a few questions there. This is a quiz, and the answers to these questions will be verbalized to you at the end of my presentation. And today I will take a look at VAT from the perspective of sustainability and certainty. And I will speak about tax sustainability, and I will rely on my expertise. I will speak about the general issues related to the VAT system and the issues related to certainty in VAT, as well as the questions raised by the Court of Justice of the European Union rulings. And I will try to look into the nearer and further future, whether or not we will have greater sustainability and security. Speaking about tax sustainability, I tend to associate sustainability with cohesion, and tax sustainability is the coherent development of tax relations that help achieve social, fiscal, economic objectives, also comply with legal principles, assure taxpayers equality, the principles of justice. And VAT also has an important role in sustainability. VAT pursues a fiscal function. It is intended to collect the state budget, but there is also VAT tax evasion and VAT tax gap that are the issues. VAT is one of #1 taxes that are evaded, along with the corporate income tax. Speaking about sustainability from the legal and regulatory perspective, legal uncertainty issues go along with the VAT. Speaking about issues related to VAT system, VAT gap is one of the most pressing issues. The VAT gap is the theoretical measure reflecting the potential amount of taxes that could have been collected and the actual amount collected. For example, in 2021, member states lost 61 billion euros in VAT due to tax evasion and other violations. In the same year, Lithuania lost about 800 million euros in VAT, but situation is improving, and this year the gap will be just 11% in Lithuania. At least it is predicted so. Hopefully, we will someday become like Sweden, where the VAT gap is just 1%, but this is the gap of the dream. But what is behind the VAT? The issues behind the VAT are abuse, avoidance, evasion. These are different categories. Difficulty in legal regulation and its application, leading to the issue and lack of legal certainty, including different procedures, awareness of procedures, tariffs in other countries as well. In particular, this applies to those who operate internationally. There are different regulations. For example, there is the violation of principle of neutrality. The burden of proof is another issue, and this is the most pressing issue in relation to VAT because collection of proof takes place after a certain time. And this is fairly difficult to do it both for the taxpayer and the tax administrator. From the foreign researchers' perspective, they emphasize that tax administrators in one country do not focus on VAT going to the countries where it should go. In terms of, for example, e-commerce, the VAT should go to the country of the buyer. However, if this has not been done so, not all tax administrators take care to ensure that the VAT goes where it should go. And this is not about the Lithuanian tax administrators, but about the European tax administrators in general. Speaking about the VAT, I have come up with this motto. This is a mushroom picking season, and in Lithuania, this is like a seasonal national sport. And my motto is, understanding VAT is not picking a mushroom. But, you know, it is quite difficult to understand VAT. And this leads to different interpretation of legal regulations. Of course, this is the duty of a tax administrator to consistently apply tax regulations and even check its consistency with the European practice. And there is the whole list of the rulings by the CJEU. There were 98 rulings explaining the application of VAT. Because when dealing with the VAT, national law is not sufficient. And the situation, dealing with the situation, should include taking account case law of the Court of Justice. In Lithuania, there are thousands of these cases, and I'm not going, of course, to conduct any surveys here. And we have 153 rulings pending. 2 of them came from the Tax Dispute Commission. Another issue is time. It takes 17 months to get the ruling from the Court of Justice. But there have been cases where it took 3 or more years. This means that you need to wait for legal certainty. The Lithuanian Supreme Administrative Court, starting with 2004, adopted half as less rulings as the Court of Justice, but still the figure is impressive. And it also forms the case law. The statistics of the Supreme Administrative Court also shows that VAT is one of the most popular issues that are being disputed. So it's no mushroom picking, as I have said. And this is the most detailed slide that you will see during my presentation. So legal certainty and VAT. Legal certainty starts with the legislative procedures. From the definitions, I have also looked into studies by foreign researchers. There are vague definitions such as other or equivalent, other or characteristic services, and so on. However, which characteristics do we apply to decide whether they're similar or not? There are directives, regulations transposed, but the provisions are not being detailed enough, although the European legislation allows for it. There are different explanations, individual explanations. There is lack of clarification of some concepts, differences in interpretation of norms and provisions. And we often look to the neighbor. For example, if the neighboring countries consider this service to be the certain type of services, and we tend to follow our neighbors. However, according to the Court of Justice, if our regulations are different from our neighbors' regulations, we should refer to the Court of Justice. It is the Court of Justice of the European Union that forms the case law. There's also the issue of identifying the VAT subject, including the type and content of the transaction. This is the question number one. There is the whole list of different aspects. You should decide whether it is a financial or technical service, whether it is real estate related or not. You might be surprised, but window cleaning is related to real estate services. We need to decide whether it is a workshop or consultancy, accommodation or rental. All these aspects determine taxation. There are also complex transactions. Just imagine an event including catering, including guided tours and accommodation. Is this a single service or 4 different services? Do you apply tourism margin or not? I try to calculate different rules related to VAT, and I stopped at rule number 19. So the difference in interpretation is an issue. Another issue is locating the place of service, the country of service, the identification of the place of establishment of the buyer. Chain transaction is another issue. And let's dive deeper into chain transactions. For example, company A sells to company B, and company B sells to company C, while the carriage, the shipping takes place from company A to company C. The issue is the myth. 90% of businessmen would say that if goods are exported from the country, I can apply 0% of VAT. But the application of 0% of VAT depends on which of the parties considered to be the carrier. According to the VAT law, it is the one who carries the goods or who relies on a third party to carry the goods. But the third party is neither the buyer nor the seller. But what if there is the situation where the buyer or the seller hire each other to undertake carriage? Then there is no third party. Does this mean that this transaction is not subject to 0% VAT? Well, you know, chain transactions are associated with the question, when do we apply 0% VAT? Then there is the doctrine of fairness, of integrity. And this doctrine raises quite a lot of questions in case law. A fair taxpayer does not know whether he will be able to prove whether he was prudent enough. And there is it is impossible to draw up a definite list of aspects of prudency, and fraudulent actors would probably learn it by heart. It is important also to discuss which circumstances raise doubts for the tax administrator. And the overall problem is that the fraudsters can create the appearance of due diligence, of prudency. Whatever the amount of documents the tax administrator may request, everything might be submitted to them because it is the fraudsters that are the best aware of all aspects of the VAT. Another aspect and question is whether the supply of private needs of employees is subject to VAT. According to the rule of thumb, private consumption is subject to VAT, but according to the Court of Justice of the EU, in one case where the employees, the best employees that showed the best performance that year, they were given gift vouchers. Can you imagine there are employers like that? And those employees could purchase clothes or something else. This was a private benefit, but these were the best employees. Nonetheless, the court established that this benefit was additional to the business goals, and this decision led to quite a lot of deliberations, both in academia and in practice. But the question is, how do I establish that the personal benefit received is merely ancillary, additional to the business purpose? The Court of Justice helps here and proposes looking through the perspective of an average consumer. An average consumer is not very aware of the VAT and cannot apply it properly. Another decision that I'm going to stop a bit when, for example, you miss some details in an invoice, it seems that it is not a big problem. You can correct it, but it is not as easy as it may seem. According to the Court of Justice, and this is the situation where Company B issued an invoice but did not enter certain information, and it is related to reverse taxation. You might ask me, that's not a big deal, but the Court of Justice concluded that this lack, this shortage, was material. It couldn't be corrected. Only the shortages that are considered to be immaterial can be corrected. And accordingly, a single piece of information in an invoice has ruined the facilitated triangular VAT scheme. Is this strict position applied to any situation or to the situation where there are signs of fraud? I have heard that certain tax administrators, in particular in Germany, are very active in applying this practice of missed information. Speaking about the proof, the burden of proof is the liability of the tax administrator. However, the Court of Justice has already started turning to the taxpayer and saying that if the buyer has failed to submit proof that the seller had the status of a taxable entity, then the VAT deduction, the right to VAT deduction is removed. And the seller, the tax administrator, does not have the duty to prove that the buyer was not diligent. And tax law is a very strict law. It is impossible to present all situations in a single presentation, but there is another situation where the burden of proof has shifted to the taxpayer's side. And let's make a step towards green sustainability. When we hear sustainability, we associate it with ecology, with the environment. But for me, sustainability is not only about just that, it is also coherence. However, I would like to speak about green sustainability. There are tax benefits for example, PV panels, such as Poland, the Netherlands, Belgium. Do we need these tariffs? I think that we don't. And I rely on studies that I have gone through. For example, should there be reduced VAT tariffs? Well, the reduced tariffs lead to only a slight adjustment in taxpayers' behavior, and VAT administration costs grow. There is the motive for VAT fraud, and there is lack of legal certainty. Now, let's speak about changes. Will there be a greater sustainability certainty? Will there be less evasion? And will everything be clear? This is a dream both for the tax administrator and for the taxpayer. Very shortly, there will be changes for small businesses. There will be a single VAT scheme. The foreigners will not need to register as a VAT payer starting with the first euro. And VAT will now go to the country where the viewer of an online event is situated. But let's imagine an event visited by 10,000 participants, and we'll need to register every single participant who has joined the online event. There are also other provisions that will bring greater certainty, including financial services and other aspects. They also account for the case law of the Court of Justice. The Lithuanian system VIDA is already a very electronic invoice. This includes common registration as well. And this brings, of course, a greater benefit. It will improve the situation, but it will take time to do so. But how can we further improve the sustainability and legal certainty of VAT? As I have already mentioned, it takes quite some time to receive the explanation of the Court of Justice. But hopefully when the Court of Justice will share the responsibility with the Court of Common Competence, the time, the duration of deliberations will become shorter. It is also suggested to harmonize the statute of limitations for VAT between countries and make more active use of the existing EU instruments, such as cross-border rulings. It should also only a single specialized institution, such as the Tax Dispute Authority, should be assigned to deal with these issues. And sometimes we face the situations where individual explanations do not correspond to the actual situations, and we should make them more common. So thank you very much for your presentation. It was very interesting, and it turns out that remote conferences free of charge will be easier to conduct.
Bei advokatas. Pereinam prie mokesčių administravimo.
Next, we will hear from lawyer and lecturer at Vilnius University, Povilas Gruodis, and he'll talk about problem issues of liability for tax violations, what's new with the regulatory changes. And I would like to encourage you to keep writing questions on Slido, so we could get more of you participating. Thank you very much, dear moderator, for introducing me. Today, I would like to present, within the topic of sustainability, results of a rather sustainable piece of research. It's a continued research which commenced in 2010, and we've continued with it, aiming to assess and monitor and research responsibility for breaching tax laws and related regulation and other aspects related to that. So where is the aspect of sustainability within the topic? And it's hidden under the word with the change in regulation, because each change needs to be executed from the point of view of sustainability. Sustainability does not require us to keep wearing the same sweater for 10 years. It's not sustainable. But before you buy something new or implement a change, you need to make the decision, reasoned decision. And only once your decision is looked at through the prism of proportionality and knowing that your benefit will be greater than the certain problem that your purchase might create in the future. So the problems of sustainability can become very evident when we start looking at changes. The way we look at the responsibility was affected by changes over a certain period. So over the period of 4 years, the responsibility for breaching tax laws, this system of sanctions, were changed 4 times. So we have a very brief period of time and a lot of changes that are rather substantial. So when you look through the point of view of strictness of sanctions, we can see that penalties can be from 10 to 50% in 2019, and today they're 4 times larger, from 20% to 200% of unpaid tax. So what should we think about such a change, whether this change is sustainable or not? And the response to the question could be found by a very recent, this year's April's assessment by the state audit institution on the assessment system of the legal regulation effect. And the state audit authority, it's not the researchers or taxpayers that are unhappy about taxing, and not only in the taxing area, but they found the authority found that the legal regulation and the changes in the field do not follow the requirement of sustainability, which means that we make changes in laws without planning. And for 59% of changes in law failed to have the assessment of effect, which shows that we actually change laws without prior planning on the effect the change might have in the future. What other problems are important? Changes come, or changes and changes in law usually are prepared by people who have no competences. And somebody talked about strengthening the competences of the authors of changes in laws. But when you read the proposals, you can see that the authors of proposals had no competences whatsoever. So in this area, when we talked 59% of all pieces of legislation that were studied, they had such issues. So when we talk about tax law changes, which are related to responsibility of tax law breaches, we could say that 100% of low quality or no quality issues, because these issues correspond to all legal responsibility system changes over the period of 4 years. No feasibility studies or assessments of effect, and nobody ever considered discussing whether the strictness needs to be higher or not. So we have one proof that tax sanction, the system does not correspond to sustainability principles and requirements. Next, I would like to touch upon certain specific issues, how the lack of sustainability manifests in the current version of legal responsibility system. So here you see a very simple comparison between fines, tax fines imposed, and criminal liabilities, criminal penalties. And we know that the latter are the strictest form of penalties, and they should be the most aggravating. So we see the sanctions on one side, and on the right-hand side, we see an example from a real court case, which shows what sanction was actually applied. So we see that for a natural person, according to the criminal code, for the very the most difficult case, they could receive the penalty of 312,000. So the tax penalty could be much, much higher compared to the strictest penalty of the criminal code. When we talk about legal entities, on the right-hand side in the case, we can see how easily the tax penalty, tax fine, can be higher than the penalty envisaged in the criminal code. So for the most difficult misdemeanor, we could have 15,000 euros in penalties, and then we can see how sanctions can be much greater. compared to those indicated in the criminal code. So tax sanctions are not so small, and they can actually be even stricter compared to criminal sanctions. So what are these tax sanctions? Tax sanctions in Lithuania are two kinds, penalties and interest on arrears. Interest on arrears is a phenomenal sanction. Why? Because so far nobody has recognized them as such, as sanctions. And interest on arrears can be named a motivating instrument, a compensation, etc. But actually, according to the current treatment and regulation, this is a sanction with a very clearly distinguished element of a repressive nature, and it's punitive. We could probably dispute on such a position and point fingers at Lithuanian case law, where they say that interest of arrears are for compensation, motivation of taxpayers to pay taxes voluntarily. Nevertheless, and of course the same is repeated by the tax authority. Nevertheless, when reading 988 European Court of Justice rulings, which were mentioned by Vilma, we could find a ruling for Lithuania by the European Court of Justice of 2018 in neither case. And in the case, the issue was on the same interest of arrears as compensation instrument used for the tax authority when we no longer apply it for taxpayer but for tax administrator or tax authority. From the case, what becomes evident in the entire EU with the position of the government of Lithuania, and you can see quotes from the ruling, where the Lithuanian government expresses verbis indicates that interest of arrears for tax authority cannot be applied because they are a part of punitive element. They are for as a punitive instrument and cannot be applied to the state. And they are too large of a compensation for a taxpayer and do not apply to the state because they create too big of an advantage. So we have a dual legal reality that courts close their eyes as well as the tax authority, and they don't see the reality of the interest of arrears and try to prove that this is a compensation tool, a motivation tool, and it cannot be reflected back and applied to the state, and the government believes that this sanction has a punitive element and it would not create a proportional situation. And this is evidence showing that interest of arrears is a sanction with a clearly distinguished element of a repressive nature, punitive nature. So when we look at the position of the government and the current regulation of the interest of arrears and acknowledging that this is a sanction instrument, we have a very clearly observed evident issues related to interests of areas. First, we don't have in our legal regulation rules that would somehow limit their calculation in time, and because it's limitless at the moment. And the slide shows how they could be calculated for 10 years and longer. And in practice, such situations occur rather frequently. And when we made the investigation, we found the international or the training material of the currency fund on how calculations should be made, and the case of Australia was used as good practice, indicating the recommendations that states should avoid punitive element in the interest on areas, as we have in Lithuania, where we have such an element and we seem to be proud of it. And secondly, as Australia also does, the punitive element of the interest of areas should not be applied retrospectively for the period before the breach was established, because it's then punishment or penalty, sanction. And the norm in Australia is 7%, as in Lithuania, and it applies for 6 months since the breach was identified, and then compensation tariff of 3%. In Lithuania, we have punitive interest of arrears, which can be calculated retrospectively from the period it's been indicated, and the investigation can last 2 or 3 years, and then we investigate for the period of 5 or 6 years, and then we end up with a compound period of 10 years and even more. And this is the period for calculation of the interest of arrears. And then we have another issue, another problem, that our legislation, the tax administration law, does not establish any rules on interest of areas, and it seems to be a sanction as a penalty. So when we penalize the guilty party using the interest on areas, there are no rules how these sanctions could be used together, knowing that they are sanctions. We know that the principle of fair punishment, sanctions need to be aligned, and the courts should have possibilities to consider the compound effect and amount or scope of both penalties. And in Lithuania, we don't do that because interest on areas are not considered a penalty. So we should probably need one first case when a taxpayer would raise a question on the correspondence of such a regulation to the Constitution. And in my understanding, it would be good grounds for the Constitutional Court to acknowledge that the current regulation of interest of areas does not correspond to fair penalty principle. Another issue is the tax administration law does not provide for rules to align criminal penalties with interest on areas, and we saw that they can be calculated for a large or long period, and the amounts could actually be much higher than according to the criminal code. So we don't have that in our law, which breaches the principle of non-dual penalty applied on the guilty party. And also differentiation rules are amiss, and we have situations when courts they follow the proportionality principle and fairness principle, and they try to reduce the sanctions without legal grounds, which indicates that interest on areas as sanctions, their regulation rules should differentiate and provide for different cases, because then we again face the issue of constitutionality. When we had, for example, a case of Sodra penalties without differentiation, and that was complex and difficult in terms of court cases. And as we also mentioned, the investigation or the study took a long period. We could probably continue talking about different issues that are related to regulation of insufficient sustainability of penalties and responsibilities. So for the very end, I would like to talk about sustainability. So if we want to strive for sustainability, we need to consider human rights, not forget about them, and respond to the question whether the change is actually related with sustainability. If we fail to explain the reason why the change is required, and we make a change for the sake of change, probably the change is not leading to the sustainability, but non-sustainability. Thank you very much for the attention.
Thank you very much. And since we are short of time, I would like to introduce our third speaker. This is Dr. Martinas Andriaitis, Deputy Head of the State Tax Inspectorate and Associate Professor at Vilnius University. And today he is going to speak about current issues and trends in tax administration, a scientific approach. And I would like to remind you that you can send your questions on our YouTube platform. Hello, everyone. My topic today is current issues and trends in tax administration. However, it will be more specific, and I will be speaking about the decisions on approval of the inspection reports. I will also raise questions about whether we can apply this rule to the tax administrator's decision. Since the topic is sustainability, in my presentation, sustainability is understood as clarity of the tax administrator's decisions to the taxpayer. And today, I'll speak from a scientific perspective, not from the perspective of a representative of a tax inspectorate. And I will try to present this topic in an unbiased view. So first of all, let's speak theory, and then let's discuss its application in practice. French casuists analyzed the administrative court decisions, and tax law is part of administration law, and they have identified 3 levels of intensity of judicial control. The idea is the following. When administrative courts consider decisions of public bodies, they assess proof at 3 levels of intensity. First level is limited, for example, when the violation is evident. Person, for example, has not attached a contract to prove his action. This is a limited control, just formal submission of the proof that was missing. The second level is the normal control, where the totality of proof is considered in view of the one who submits the complaint and from the perspective of the tax administration. And this is the normal control, deciding which party has submitted more evidence. And then there is the intensive control, and here the clarity, legality, and reasonableness of the decision of the tax authority is discussed. And it is the justice and legality of the decision that is being scrutinized. Let's try to discuss whether this theory of 3 levels can be applied to tax administration. Speaking about a tax administrator and tax administration, these definitions are very broad. Tax administration covers the exercise of the functions of the tax administrator, duties and rights. And according to the tax administration law, it covers the tax administrator's decisions on the inspection reports, the binding rulings, which we have already heard about from our colleague Maria. And it also includes other decisions without any legal consequences, such as, for example, explanations, phone consultations, written consultations, answering taxpayers' questions, and so on. So all of these aspects fall under the definition of tax administration. And I will now speak about the decision on approval of inspection reports that are made by the tax administrator during inspection. And I will try to look how this 3-level theory can be applied. Speaking about the tax administrator, I will try to apply the following. First level is limited control by the tax administrator when a document is submitted and a decision is made. Well, for example, this could also include not only inspection reports, but also the situation where the tax administrator has to receive the overpaid tax. And statements have to be submitted for the previous periods. And then the overpaid tax is returned for the current period when the taxpayer submits the tax return. So this is the duty to submit a document and a certain action is performed. However, I understand that it is applied only in a limited scope, because the tax administrator usually also looks into the content of the document. The second level is the normal control by the tax administrator, and these are decisions on the inspection reports. There is the tax inspection performed. Its result is registered in the inspection certificate, and then the taxpayer can submit questions on the inspection report. And the tax administrator can perform the normal control, where they assess their circumstances that they rely on in taxation. They assess the taxpayers' circumstances, and then they compare the arguments. The third level is the intensive control. And let's be quite ambitious. Same as court, tax administrator is not just about the legality, but also about the justice, and they assess the reasonableness of the decision, whether the decision is reasonable, and what consequences it brings not only on the taxpayer, but also on other taxpayers, whether or not this decision is reasonable. Even if the taxpayer does not have all the documents to prove certain tax circumstances. And a bit later, I will present a practical example of an intensive control by the tax administrator. But before that, I would like to speak about the decisions of tax administrators and the court's position on that in relation to the three-level of intensity theory. You can see the main questions and aspects not only in relation to the inspection reports, but also in relation to other relevant issues touched upon in the questions sent to the tax administrators, as well as publicly available explanations. In terms of the case law, it is usually VAT deduction, VAT 0% application, cost deduction, and in tax administrators' commands, these are assignment of shares to foreign entities. There are also valuation of entitlement to interest expense, loan transaction chains, and so on. And there is also the question when these decisions and explanations by the tax administrator, whether or not they are reasonable or not. Let's now speak about the decisions on the approval of inspection report. Looking at the case law, I analyzed quite a lot of explanations by the Supreme Administrative Court of Lithuania. You can find everything in the scientific article that will be published in the conference proceedings. Well, according to the court, the public administration decisions shall be impartial and objective. And speaking about inspection reports in particular, they have to be based on the legal norms and on actual circumstances. The court can also has also explained that the tax administrator has to prove not only their decision regarding the taxation, but also account for all the circumstances submitted by the taxpayer. And the court has also passed the explanation that content is above the form, and this applies not only to the taxation, but also to the decision to not impose taxes. And content should be more important than formal requirements. There might be situations where formally the taxpayer may be subjected to the taxation, but if the tax administrator assesses the content and decides that there are no grounds for taxations because this was a usual business transaction among profitable companies, and there is the transfer of shares, and the companies do not lose the right to benefits. Speaking about court rulings, a court has issued the explanation that provision of reasons in the decision shall be sufficient, adequate, and clear. And in the decision, their reasons shall be stated in a way that they are clear and understandable to the taxpayer in relation to whom the decision is made. But the question is, who should be clear about those reasons? Is this the CEO of the company? He's not a lawyer, not a tax specialist, or whether or not the reasons are clear to his lawyer or legal representatives. In any way, the entity in relation to whom the decision is made shall be clear about the consequences of those decisions. So this was the theoretical aspect and the aspect of the case law. But now let's speak about the actual practice. Here you can see the example based on the decision of the Supreme Administrative Court. But since this is a scientific conference, I will just make emphasis on specific aspects. I have presented the theory of three-level intensity of proof. How can it be implemented in tax law? For example, have a shareholder intending to purchase company B and establishes an intermediary company A, which purchases the shares of company B, and then there is the merger, and the mother company joins the daughter company. Then the result is the profitable company. And according to the case law, the situation was that Company A had a minimum initial capital. It had no employees. It performed no actual operations. This was just an empty company. And it merged with Company B. As a result, Company B, which used to be profitable and continued its operations, and after the merger, it continued the operations. However, there were costs of goodwill depreciation, interest, and tax losses that resulted from the interest costs and goodwill depreciation. The tax administrator assessed the situation during the inspection, submitted the remarks. The taxpayer submitted all the evidence, explained the contracts, explanations, explained the sequence of their actions. However, if we look from the from the point of view of the three-level intensity theory, what are the consequences and the essence of this transaction? The result is that we have the company B, which resumes its operations, but it gains goodwill depreciation and interest losses, and it has negative profit. And as a result, certain taxation consequences arise. In the decision on the inspection report, the tax administrator does not cite any particular theories, but we can clearly see that the third inspection intensity was applied. And here, for example, if we had two profitable companies, Company A and Company B, they resumed their operations, and one of them acquired shares of another company for the borrowed funds. After the merger, the company resumes the activities of the both previous companies. The situation is quite normal. It is clear. It was clear that the business did not have enough funds to acquire the shares of a million worth company, and they borrowed funds to purchase another company. As a result, there were goodwill depreciation costs. So if there is a merger of two profitable companies, the three-level intensity theory raises a question of what is the purpose of this transaction. As I understand, the tax administrator would assess the situation and would say it is quite a normal situation. The company used to undertake marketing activities. Now it has purchased another company, such as advertisement or promotion companies. And this is quite natural, and this would not result in any additional tax consequences. However, in the situation that I have presented, there was one profitable company and another company that was not making any profit. Then the purpose of those actions is very unclear. And then there is the decision on the inspection report that provides reasons for taxation. In this specific case, the court emphasizes interest loss and goodwill depreciation loss, and the court ruled that this was not allowable deductions. Allowable deductions would appear if the company acquired shares for borrowed funds and had economic benefit. If a company that acquires shares acts in the interests of its shareholders, the deductions are not allowable. So the economic benefit should go to the company that acquires the shares. Speaking about the goodwill, the court also confirms the considerations that the company that acquires the shares should gain benefit. And speaking about the laws, we have already heard about the tax laws today. And I would like just to remind you that, for example, according to this ruling, the tax administrator knows how to calculate the tax losses and follows the statute of limitations. But in order to establish the balance, the tax administrator takes documents of the previous periods and asks the taxpayer to submit them in order to check the validity of the tax losses. And this is the position of the court, that the administrator can request documents for the previous periods. And my conclusions is as follows. According to the three-level intensity theory, in decisions on the approval of the inspection acts, a tax administrator should apply intensive control. It is not enough to apply the principle of competitiveness. The decision related to the inspection act shall be adequate, clear, and sufficient. And the reasonableness of the decision implies that the decision shall be assessed not only in terms of circumstances to the taxpayer, but to all taxpayers in totality. And in this case, the tax administrator has assessed that the economic benefit should go to the company that purchases shares, and the consequences to all taxpayers is that the company shall act in its own interests rather than in the interests of its group of shareholders or shareholders. So thank you for your attention, and I hope I have contributed with this theory to the sustainability and certainty.
Thank you very much. And next we'll have a recording because Aiste Medeliene is abroad and she recorded her presentation and she will give an interesting presentation, and we will hear from her once. Hello, I'm Aiste Medeliene, partner at law firm Wallace. Taxes have been my lifelong project. I started my career at the Tax Dispute Commission, and I've continued my career in the private sector for more than 12 years. And my topic today is pretrial tax litigation, and this is a topic very close to my heart, not only because I analyzed this process during my doctoral studies, wrote a whole book on it called The Dissertation, and not only because of that, but also I worked at the Tax Disputes Commission, and I really saw the process from the inside, defending the status of this institution at the European Court of Justice, but also because I truly believe in the value of this procedure and the necessity of its existence. So my topic today is pre-litigation phase of tax disputes and its impact on the parties to the dispute. I will concentrate on disputing party, the taxpayer, and a little bit about tax authorities and process. So every report, every topic is good only when it's important. So why it is important to talk about this pre-trial tax dispute process? If you Google a little bit on the internet, you can find some headlines that are really worrying because they broadcast one very worrying message. It is not worthwhile arguing with the tax authorities because you will always lose and it will damage your reputation. So really, does it matter whether you can argue, whether you should argue, and whether this behavior should be encouraged or whether this behavior should be avoided? This is the topic of today. A brief description of the content. This is actually a very short time that I have, and I will focus on the fourth part of the content, conclusions and proposals. So for the very beginning, we need to decide what are tax disputes, what compulsory pretrial proceedings are, and who is involved in the process. Of course, we'll talk about tax dispute commission, what it investigates and does not, and we'll raise few discussion points which should be considered. So tax dispute, first, it suggests what it is. It's a tax dispute, a dispute over the application of the rules on taxation. And it arises, of course, between the tax authorities and taxpayer. All the other formalities are perhaps only incidental, where decision is being appealed, or whether it's an inspection report or other similar decision, whether it's to calculate and redetermine the tax to be paid, and also the decisions of the tax authorities to refuse to repay or to credit an overpayment of tax and other disputes can be divided into two parts. Other disputes between the tax authorities and the taxpayer, which are called administrative disputes, and other part, which are not disputes by definition, but are dealt in the mandatory pretrial procedures. So it is mandatory. A tax dispute must be subject to binding pre-litigation procedure under the law. As I said, I am a great believer in this pre-litigation procedure, so I think it's necessary to give a brief presentation on how it's done and how it's implemented. So here we have a chart which helps to understand how complex is the procedure right now. It depends on whether the local or the central tax authority takes the decision. If it's local tax authority, then mandatory pretrial proceedings take place at the central tax authority. If the central tax authority, at the tax disputes commission, and at the tax dispute commission in cases where the central administration has dealt with the dispute, and the pretrial procedure may be an optional further stage of the pretrial procedure. Well, then the dispute goes to the courts, to the regional administrative courts as the first instance, then to the Supreme Administrative Court, and then that's the end of it. So 4 or at least 3 instances to deal with the tax dispute. Next, tax dispute commission. Very briefly, what does it deal with? It deals with the appeals against inspections carried out by the Central Tax Authority, as well as appeals in cases where the Central Tax Authority has dealt with the dispute through the mandatory pre-litigation procedure. As I have already said, it's a matter of choice for the taxpayer whether they will apply directly to the court or whether they will give the Tax Disputes Commission a chance to have their say. Well, of course, in cases where the Central Tax Administration does not take a decision, the Commission passes this right to examine the complaint. If you took a little deeper, more specifically, Tax Dispute Commission deals with appeals against 3 decisions of Tax Authority, of the State Tax Inspectorate or the Central Tax Authority, and we can see what sort of disputes are there. Then appeals against the taxes administered by the custom authorities, the Customs Department, and the Central Tax Authority for such such appeals, but the checks are carried out by territorial customs, that the Tax Disputes Commission remains an optional body, but nevertheless, since 2004, it deals with these disputes. And the very last group of disputes that the Tax Dispute Commission is tasked with dealing with the complaints about environmental pollution tax. And in this case, you can see that not all environmental taxes go via the Tax Dispute Commission. The Tax Dispute Commission also deals with complaints about non-exemption from fines and penalties and about the crediting of tax overpayments. These are disputes that are called non-tax disputes but are dealt with in accordance with the procedures laid down for them. But what remains outside the scope of the Tax Disputes Commission, the so-called administrative disputes with the tax authorities, can take many forms. They can be appeals against binding decisions taken by the state tax office, the state tax authority. This is due to the way in which a taxpayer has applied in advance a tax assessments and their future transactions and receives a decision with which they disagree. Binding customs information and tax origin also travel in a different order from tax disputes. That assessment of tax liability when the tax authorities determine on their initiative in the absence of declaration by the taxpayer. These disputes are also not a part of disputes commission, and also, we can see taxes on public natural resources, which are environmental taxes. But as I said, the Tax Dispute Commission only has competence for one tax on environmental pollution and other disagreements of various kinds, which can appealed against decisions by the tax authorities on recovery, on certain actions, and they are not considered tax disputes. So we have a schematic outline of how they are dealt with. It is the decision of the Central Tax Administration that can be appealed optionally to the Administrative Dispute Commission, and if that's not chosen, directly to the court, the Regional Administrative Court, and the Appellate Court, the Supreme Administrative Court. This brings us to our main question: what needs to be changed and whether the change is required? These questions are debatable, the proposals are also, but maybe it's high time to start. There's the pre-litigation procedure for the Central Tax Administration. Has been a question for many years whether it's not excessive. In my opinion, this procedure in this institution is really excessive, because the fact is that the Central Tax Authority is really questioning whether it's examining a dispute or whether it's examining the legality of the decision administratively. Can the authority deal with a dispute within itself? Can it make an objective decision, or is it a dispute hearing at all, when there is no hearing, no procedure, but simply a written complaint assessment? In fact, from both a scientific and practical points of view, I would argue that such a dispute is not a tax dispute at all. In general, it is an administrative review of an act, which is in fact already being carried out in the course of an inspection or other procedure. For example, in the case of inspections carried out by the National Tax Office, comments can be submitted. If the customs authority is notified an unfavorable decision, it's possible to submit opinions on such decision, and the taxpayer is already heard and given the opportunity to see it, whether they agree or disagree, and why. And the review of the act actually takes place before the decision is taken, which becomes the basis of the tax dispute. Therefore, in my opinion, it is indeed highly debatable whether the presence of the Central Tax Administration of the mandatory federal entity is not excessive. So I'm putting this question up for discussion, and we schematically can see such a procedure would be simpler, clearer, and more transparent if the Tax Dispute Commission were the only body that dealt with the tax disputes before the courts. I don't have time to address this point and to talk about whether there is a need for pre-litigation, but I will hint about it later. The second proposal is to revise the Tax Disputes Commission's competence. It could be expanded to include disputes with the tax authorities that are essentially tax disputes, but even though they do not currently fall within the definition of tax disputes. And if you remember the previous slide about the disputes which fall within outside the definition of tax disputes and are not dealt with according procedures laid down for them. There is a suggestion for discussions where tax disputes or disputes that are dealt with according to the procedures, but it's already a matter of technical, legal technicality and the competence of tax commission, and they could be disputes concerning binding decisions from tax authorities, and binding information issued by the customs authorities, disputes over all environmental taxes because it's not clear why environmental taxes are singled out, where one tax is subject to pre-litigation procedures and others are not. There is also the calculation of the tax liability, where the tax authorities calculated themselves without the taxpayers having submitted a tax return. And there are disputes over decisions that do not, as it were, impose a new tax, but are disputes over taxation, such a decision that reduces tax losses. In fact, such disputes are already classified in practice as tax disputes, but law isn't perfect and should be made clear. So why have I selected such disputes and why I consider them and I believe they are part of the Commission's competence? The reason is that examining the validity of these decisions, the issues raised in them are exactly the same as those raised in tax disputes, but tax disputes, which are simply tax disputes, do not impose an additional tax. For example, binding decisions of the tax authorities, if there are tax assessment, it would be a tax dispute. If questions about the future, it's not tax dispute. In my opinion, by their very content and the competence of the dispute commission already has, such issues should be dealt with the dispute commission and then by the court rather than going straight to the court. Well, and probably the softest topic, it's actually the efficiency on confidence building of the pre-trial treatment of tax disputes. We could probably give another 20 minutes for the topic, but first we could probably look at the work statistics of the Tax Dispute Commission. In the context of today's report, I've taken two indicators from the stats published on the website of the Commission: how many decisions were taken by the Commission in a given year, a decade later, and how many of those decisions were not appealed, which means that the decisions have become final, entered into force, and enforceable. So this is one of the trust indicators. So we can see in general that the Commission has been taking up one decision a day for the last decade, even less, except for 16, 17, when there was a bit higher number. So it's probably capable of making more, so extending the remit would certainly not make it any more difficult for the Commission to work. But even more importantly, about half, sometimes more, sometimes less, but in principle, the number is half or more. And most of the time, if you look at these figures, the Commission's decisions become final and no longer go to court. What does it mean? It means that the Commission, in principle, makes decisions reducing the workload of courts. On the other hand, we look, for example, at the fact that the tax authority does not provide statistics on how many tax disputes it resolves and how many inspections it carries out. The statistics would be difficult to count. But in fact, in the first half of this year, the tax authority indicated having 203 inspections, which means that they could have potentially 203 disputes. Obviously, not all inspections turn into disputes, and perhaps not all disputes go to the Tax Disputes Commission. So we return to the proposal to improve the quality and credibility of its work. We must not forget why it is important, because all the press is screaming not to argue because you will lose. The stats are confusing. The tax authority declares that it wins more than 90% of all disputes. What message does that send to businesses and taxpayers? Don't argue because you will lose. It's the waste of time and resources. Is that a good message? We would probably agree that it's not. Because the only message that was not bad, that the decision of the Tax Disputes Commission, very many of them have come into force and were reported in the press in 2020. But it's not clear whom they favored. So how could we build confidence in pre-trial dispute resolution and to be consistent in our proposals for the Tax Disputes Commission, which is the only one that I think should also provide that function. First, the process, pre-litigation process, should be understandable. Why it is proposed to simplify it a little to make it easier to understand. Advisors, consultants have good understanding of how it works, but it's not as easy for taxpayers. Then the procedure should be simple and understandable. It must be accessible. The time limits that are set for lodging appeals vary widely. In some places, it's 20 days, then 30 days, 1 month. Taxpayers get lost and feel that it's difficult for them to defend their rights. It may be worthwhile considering extending the time limits for filing a complaint for a tax dispute, because a tax authority can have an audit for 5 years and then you have to complain in 20 days. It should be, and it is, free of charge. As regards live working, I will be very unpopular. After COVID, we started loving remote working, but live tax litigation is real when it's live. When the taxpayer is somewhere else, then it's understandable that remote working is convenient, but when the tax administrator, taxpayer, and tax dispute commission and courts sit in the same area and then fail to just meet in one room, they fail to have a conversation, this would actually help to increase efficiency and build trust. The Tax Disputes Commission should be and should look more credible, should be objective in its handling of dispute. This is the biggest and most difficult question, but my time is running out. I'll try to provocate and provoke you and say what's important to taxpayer. What matters to the taxpayer is who's investigating the dispute, who they are, who they support, do they approve everything, and taxpayers ask questions like that, and we cannot discard them if they are raised. So the selection and the appointment procedure of the members of the commission, their experience, where they come from, the administrator or business, for example, that would have a significant impact on trust. What the pretrial institutions support. Taxpayers ask whether that's a part of the tax authority. Do they confirm the decision? We know that it's not so, but it might seem so, and it's important to formulate the right message in order to send it using works. Does the Commission represent anyone? It should not, because it should be objective. In fact, here we face a serious problem where a tax dispute is decided, and the tax authorities have not done a very good job, but then they are given a second chance to do a better job. So the dispute is referred back for the fresh examination. And what does the taxpayer think? If I didn't do my job, my complaint would be poor. I would not be allowed to write a second complaint. And in general, it's quite a conceptual question whether the authority has to examine objectively and assess the work done by the parties, that is, by one party, then the other party, or whether it can, when it sees that it maybe something has not been investigated, maybe something is not clear, maybe you should go back and clarify. Should it be like that? Probably not. Whether the quality of the handling of tax disputes is very philosophical, but we could probably respond it on what's requested for submission. For example, invites for business trips. Nobody asks for or gives them anymore. Is it asking for some written decisions? Currently, when we do everything online, messages, do they ask for everything? Do they understand the business logic? and whether certain transitions followed certain business logic. What business logic is seen and understood by the institution that is examining the issue. And probably the key argument we hear when approving a process is that it needs to be faster. I disagree. I'm swimming against the current by saying that it's better to work slower, better objectively and fairly, and better for the entity to work slowly, but to work good, to provide good quality decision, so the taxpayers would feel calm that the parties understood their case. So it's better to go slower within the reason, but objectively and fairly, than to speed up the process for the sake of having more proceedings or for the sake of speeding them up, not for the sake of some statistics. So let's look at the content. I believe that the process has been going on for a long time, and the Tax Disputes Commission has good reputation in the courts and is trusted by the tax administrators, and the taxpayers should continue to trust it, and that the number of disputes in which the trust bond would increase. Thank you for your attention.
Tai dėkui Aistei, linkėjimai už.
Thank you, Aiste. She is currently abroad, but we have a few questions for our QA session. How can VAT be simplified to avoid thousands of explanatory notes? How could we simplify the VAT? Well, this is one of the most difficult questions starting 1956. And the European Commission has presented 3 models of simplification, but neither of them has paved its way. One of the suggestions is, I think that the question has mentioned it, is to introduce a tax on turnover. Well, you know, VAT does not place a burden on the taxpayer. It's the final consumer's tax, while the turnover tax, well, I think that the author of the question used the US as an example. We do not have much time. However, I can note that there will be quite a lot of those who will act as intermediaries. And the profit will come only from the intermediary services, and everyone will try their best to reduce this tax. After the QA session, I would like to answer the Slido questions in the quiz. Question is for Povilas. Is it possible to gain agreement from the stakeholders for the increase of sanctions? There has been the explanatory note about that. Well, the answer is very simple. If we read those explanatory notes, all of them are more or less the same, and the effect has been assessed in 1 or 2 words, meaning that the serious effect is not predicted. But you know, mere written words that no effect is predicted do not mean that due assessment has been made. This assessment has to rely on strong grounds. We have a very good practice, established practice in relation to the amendment of the criminal law, requirements applied to the amendments of the law. And this implies the analysis of criminal situation, reports, there have to be grounds for the amendment that include predictions related to the criminal situation and so on. And as a result, the criminal code is not being amended every single year according to everyone's wishes. There are certain rules that apply to the amendment. On the other hand, the professionals holding certain competences have to do that. In terms of sanction-related amendments in relation to tax law, no competences, no qualifications, no assessments or investigations are required. If there is a certain person at the ministry who decides that sanctions should be made stricter to fight against fraud and have increased the fines twice, they have not even assessed the effect of that. They have not made prior analysis. Of course, they might say that they would assess the effect after they see how this fine evolves. So is this sustainable? I don't think so. Thank you very much. And since we are quite beyond our time limits, Vilma, please answer the questions. Please provide the correct answers to the questions. Well, as I have promised, I will do that right now. On Slido app, you had 5 questions. First, can gift vouchers given to employees be subject to VAT? It was 50-50, yes and no. And partially they were right, because it depends whether these gift vouchers were given for special merits for the contribution to business or just as a personal benefit. Second question, can the transport of goods to another EU country without a sale be subject to the standard VAT? I removed that from my presentation, but it can be subject to standard VAT if they have not registered as a VAT payer in the country where the goods are transported. And Vida is going to solve that question. We still need to wait 6 years until she does so. Third question, does the triangular VAT scheme only apply when 3 countries are involved? Well, I have found the following answer. It did not fit into the slide. You know, the Court of Justice has not provided an unambiguous ruling. There is this committee that has explained that this triangular VAT scheme, the simplifying scheme, can apply when more countries are involved. Fourth question, can VAT invoices be revised later if a detail is missing? Yes, it can, if this detail is not material, as I have already mentioned. And the largest number of no answers were to the fifth question. Are municipal parking charges subject to VAT? The majority answered no, but to the contrary, it is yes, because they compete, and quite a lot of countries apply this improperly. And this is the ruling of the Court of Justice of the European Union, not my words. And I would like to thank all our speakers for their presentations, and I will give words to my colleague for moderation of the last session. And we will now move on to the last part, and that will be followed by the closing discussion. And for the last session, we have 3 wonderful speakers and presentations. We will have the chance to hear Mantas Jozaitis, lawyer at law firm Matieka and Ozavichus. He specializes in customs disputes and tax disputes. He also has experience in international arbitrage, he specializes in international commercial disputes. He represents companies in litigation at the European level. And I would use up his time listing all his degrees. So I will just say that he specializes, and he will speak about a very practical aspect, about the sustainability of the proposed changes to the taxation of self-employment. And our online viewers were quite passive. And I hope that Mantas' presentation will be very down-to-earth and will be very practical and relevant to our audience. And we encourage our listeners and our audience to ask questions on YouTube and on Slido. Mantas, the floor is yours.
Labą dieną visiems.
Dear colleagues, thank you very much for this wonderful introduction. I would like to thank the hosts of the event for the invitation. Since we are quite short of time, I will start with the topic of my presentation, and it starts with a question: how sustainable are the proposed changes to the taxation of self-employed activities? Well, first of all, I will try to explain why this topic is relevant, why I have chosen this topic for today. Then I will speak about the changes that have been proposed, the arguments behind those proposals. I will then speak about discrimination in tax law, since this topic is related to the changes proposed. Then I will go into further detail in differences between employment and self-employment, because this is directly related to the changes proposed. And then we will look at the conclusions that we can draw from that. Why is this topic so relevant? It is relevant because, well, primarily, when we speak about sustainability and taxes, and we have heard quite a lot about that today, I believe sustainable taxes are the taxes that are paid willingly by the taxpayers. And the taxpayers can pay the taxes willingly if they consider the taxes to be just. And if the taxpayers consider a certain tax burden or tax to be unjust, it raises a series of issues. Last year, the Parliament was submitted with a series of proposals as a tax reform. The reform was not implemented. Certain minor amendments were introduced. However, the reform was not implemented as such. As far as I know, there are still discussions on the efforts to establish those changes this year. And during the parliamentary elections, a lot of political parties include quite a series of interesting tax amendments in their programs, including tax amendments related to self-employment. Within the framework of tax reform that included VAT, corporate income tax, etc., there were also the amendments that offer equalizing the employment and self-employment taxation. This is not just a theoretical issue, and the statistics show it. In 2022, there were over 224,000 people in Lithuania who were self-employed, and this figure is constantly rising. So I believe this figure is higher at the moment. So what were the proposed changes that I'm going to speak about today? One of the changes was to increase the personal income tax rate from 15% to 20% for the self-employed, making it equal to the personal income tax applied to the employment relationships. Then the proposal was to stop deducting social insurance fund contributions in order to make the taxation basis the same. Then there was the proposal to not allow use presumptive cost method for individuals with an income of more than 55,000 euros per year. And this presumptive cost method allowed for deducting 30% of costs without any proof. There was the proposal to pay an additional 1.31% of taxable income in unemployment insurance contributions, and to increase the ceiling on social security contribution from 43 to 60 median wage. what were the arguments of the initiators of these amendments? There are a few quotations here, but I'd say the key argument is the following. They state that the taxation system leads to different treatment of persons in similar situations, and this situation does not correspond to the principle of horizontal justice. So the argument of the initiators of the amendment is that those who have employment relations and those who are self-employed are in similar situations and should be subject to similar taxation. Before moving on to the comparison of their situations, I would like to remind you that the tax law includes the prohibition of discrimination. It is established in the Charter of Fundamental Rights of the European Union as well. And the Court of Justice of the European Union has explained it in a series of their rulings for the last 30 years, claiming that comparable situations cannot be treated differently and different situations cannot be treated the same. Moreover, the Court of Justice of the European Union has recognized this principle as the general principle of the European law. This means that it is above all other national laws in the hierarchy of laws. The Lithuanian courts also apply this principle, including the Supreme Administrative Court and the Constitutional Court. Since it is prohibited to treat different situations similarly, I tried to look at the differences and similarities of people with employment relations and self-employed from different perspectives. So the first criteria I took is the possibility to gain certain allowances. An employee can seek allowance amounting to 1 to 6 median wages in case of termination of employment relationships. For example, if the wage is being late or if there are timeouts for longer than 1 month, employment relations can be terminated at the initiative of the employer without the fault of the employee in case of the bankruptcy of the employer. In the absence of the will of either party, and in all of these cases, the employee is paid a certain allowance. Meanwhile, a self-employed person does not have any possibilities to gain any allowances. They terminate their employment, and that's it. Stability of income is also very important to look at when deciding on the type of employment that you're choosing. If we look at the employment relationship, the payroll shall be paid at least once a month, as established in the employment law. There is the minimum wage. There are restrictions when it is prohibited to terminate employment relationship. And if the employment contract can be terminated, there is the prior notice period ranging from 2 weeks to 3 months. Meanwhile, if this is a self-employed person, he or she is dependent on the market, on the buyer, on the customer. If circumstances have changed, there are no buyers of goods and services, the person does not make any revenue, does not get any compensation or prior notice about that. So in terms of stability, the situations cannot be compared to each other. Crediting opportunities. This aspect may seem not as important at first, but housing is probably one of the milestones in a person's life, and usually people apply for bank loans. And in this case, stability of income, the possibility to gain allowances in case of termination of relationships, all of this is being assessed by the bank. Swedbank has also included stability of income, and continuity of income should raise no doubts if a person wants to get a housing loan. And another bank claims, Luminor, claims that to qualify for a home loan, an employee must have a minimum of 6 months of employment, while a self-employed person must have 24 months of history of their self-employment, including the criterion that this self-employment has to be profitable. So the situations are different again if you want to take a loan. Now let's look at the risks related to each situation. Let's look at a young person of an employment age. The start seems to be quite similar. This is the secondary education completed, a certain degree, housing loans, daily expenses, and so on. And that's it. If a person wants to enter into an employment contract, they do not need any investment because the employer provides everything. However, if a person wants to start self-employment, they have to invest into facilities, raw materials, marketing, vehicle, and so on. And they have to invest their own funds. When the employment contract is terminated, if the employer goes bankrupt, there are certain allowances. But if it is a self-employed person, the investment can be lost. So the risks are different again. Now let's speak about liabilities, third-party liabilities. According to the Labor Code, the employee's liability for damages is limited to 6 minimum wages, while the person carrying out self-employment activities have an unlimited liability to third parties. And if there is a liability to compensate for certain damage, it has to be compensated not only from the assets used in the self-employment activities, but also from all assets of the person. So the situations cannot be compared here as well. Now let's look at the situations from the point of view of VAT. A salary, as you may know, is not subject to VAT regardless of its amount. However, if a self-employed person makes profit, and if the income exceeds 45,000 euros in a 12-month period, they have to register as a VAT payer and pay VAT calculated from their subsequent income. So the situation is as follows. To maintain the same level of income, the person has to raise the prices of their goods and services or undertake the payment of VAT without raising the prices. Well, you know, self-employment is usually associated with a small business, and the buyers, the consumers are natural persons purchasing goods and services for personal needs. They do not have any possibilities to deduct the VAT, and the self-employed person has to undertake payment of VAT, resulting in 21% lower income. Again, different situation. So what are the conclusions? Well, first of all, at least I think that the differences are huge. And the bank's valuation is a very good and objective indicator, where a person who is employed on an employment contract is at a much better position. The choice for a person to choose either self-employment or employment contract is not equivalent. Sometimes this choice is even impossible, because if the person does not have any funds for initial investment, they have to first opt for an employment contract to accrue a certain capital in order to use it as an initial investment. I have mentioned the prohibition to discriminate, which means that the same taxation of different types of activity can be treated as discrimination. And in this case, the situation is as follows. The self-employed persons would consider the amendments to be unjust. And this could theoretically lead to different negative consequences, such as tax evasion, tax disputes rising in numbers. In certain cases, some people would probably terminate their self-employment. And there goes another consequence. Since these persons need income, they would have to search for an employment at an employer. They would take jobs, and the level of unemployment would increase. So first of all, the suggestion to the legislator is as follows. If there is need to increase the budget revenue by imposing higher taxes on the self-employed people, this decision, this need, has to be substantiated. And these substantiations need to show the amount of funds needed. Because when people decide on whether the tax is just or not, they approach the tax in a quite positive way if they see that this tax is used for their own benefit. Otherwise, they just are inclined to evade the taxes. Even if the taxes are increased, I believe that the two types of activity and taxation in relation to them should be treated differently, because they cannot be treated equally in any case. And if there is a decision to increase the tax burden at some moment in time, it is important to make sure that the taxpayers treat this change positively. This means that people need to be given the possibility to prepare for an increase in the tax burden. This would assure compliance, and this will make the amendments sustainable. And this is it. Thank you.
Thank you very much, Mantas, for your presentation. And while we're waiting for the next presenter, Carlos Kinčius from Ministry of the Environment of the Republic of Lithuania and Head of Sustainable Development and Green Transformation. He'll find his slides. I have, Mantas, a couple of questions, and maybe Mantas could respond to them. So it's related to personal income tax and differences between employment taxes and self-employment taxes. So what is the difference between the two taxes currently paid, and how would you suggest how to increase the personal income tax from self-employment? So the difference is rather large. You could probably calculate self-employed people can do the accounting two ways, and this is how on which their taxing depends. It depends whether you collect all the taxing evidence, all the documents, and pay taxes on the factual profit. And if that's too difficult to do, to collect all the documents, they can deduct a 30% system. And about the latter, I could say that their general tariff is probably 27%, depending on whether they accumulate for the additional pension, insurance. And if we talk about labor taxation, it's close to 50%. But it's, again, dependent on the amount earned. And if we talk about the way the taxing could be increased, probably increasing the personal income tax would be the most objective and the most widely applicable. And if it's increased with prior warning, probably most people would agree to that. But as Povilas mentioned also, there should be an analysis before making any sort of change. And taxpayers should be explained why these changes are made, that it's not penalizing them for choosing a different type of activity, that the state needs money and where the money is going to be used, and what benefits would be derived for the taxpayers as well as society. Thank you very much for the response. Now I'd like to give the floor to Karolis. Hello, everyone. I'm Karolis Ginčius, Head of Sustainable Development and Green Transformations. First of all, I would like to thank the organizers for inviting me to participate in this conference. I heard a lot of interesting presentations, and mine is not as technical. And I'm going to represent environment more and talk about policy and politics. My presentation has several parts, so I would like to talk about the international perspective, and then a little bit to use examples on fiscal instruments and their impact, and finally discussing measures and challenges for sustainable development. So today we heard quite a lot about sustainable taxes, and I'm talk about sustainability from the point of view of environment and environmental protection, so we just could be clear. But very briefly, looking retrospectively, 10 years ago or so, the Paris Agreement was passed not to step over 2 degrees of temperature rise, and there was also the agreement to transfer to clean energy, affordable and clean energy, which is important for the strategic objectives. Then EU Green Deal for development and decarbonization, to achieve 55% reduction of CO2 until 2030. And all of that transfers into the national level. We have National Climate Change Management Agenda until 2030, which aims to accentuate the objective to achieve 55% reduction in CO2 emissions and to increase the part of energy from sustainable, renewable resources. Then, of course, there are processes on the EU level. The 8th Environmental Action Program that has 3 crises in mind: pollution, biodiversity and climate change crises, and Fit for 55 instruments that accentuate various measures and instruments to achieve these objectives until 2030, so we could reduce our emissions by 55%. It seems that everything's traveling in the clear direction, but in 2022 we faced COVID and challenges related to that. And as soon as we have managed to deal with this issue, Russia attacked Ukraine, and we faced a new energy crisis, which showed that Lithuania needed to take very brave decisions in the energy field. So we gave up energy products from the eastern countries. And what I'd like to underline that very frequently when we talk about climate objectives and related instruments and measures, we usually get fixated on the phenomenon of climate change, as if everything's done for the sake of global politics. But we need to connect it that climate change is not only nice to have measures, but must have measures as well. The energy security and independence is the future objective. Sometimes we need to tighten our belts and to find ways how to start using alternative energy sources. So talking next about the National Climate Change Management Agenda, which was approved in 2021, the government took the decision to give up the subsidies for fossil fuels and to levy carbon and improve the taxation of vehicle emissions. So two of these objectives are doing quite well, but the last one about the vehicle emissions, we had such political issues, and we only have the tax which we pay only on registered vehicle. Also, polluter pays principle is a part of Fit for 55 2030, and the second stage, which should also be related to border carbon dioxide adjustment mechanism and transport sector. And another important plan is National Energy Climate Action Plan, which describes specific measures. I'm going to talk more detail about it later. When we became a member of OECD, we had an analysis made on the preparation of Lithuanian for decarbonization until 2050, and the Commission also provided conclusions and recommendations for Lithuania about our taxing and related environmental taxing in this context. So several conclusions were related to our CO2 emitting vehicles and excise duty on natural gas, which was rather low. And Lithuania does not apply a carbon tax and small environmental taxes. And OECD underlines that such taxes could be used for specific groups of residents in order to achieve a more sustainable system to avoid taxing more socially vulnerable groups. And environmental taxes are not economically aggressive, so they do not stop the economic development in any way. Then excise does not apply on natural gas, And today it's perceived as sustainable source of energy. And we always try to make sure that we consider all these recommendations and provide our own point of view. Then we could look at fiscal instruments and their impact. And I'd like to very briefly discuss excise duty law on environmental protection, and law on environmental pollution tax. And I'm going to use some examples, so not to go into detail and pieces of legislation, because we don't have a lot of time. So law on environmental pollution taxes, environmental impact, I'm going to use several examples. The landfill tax. Since 2021, the landfill tax has been increased. And clearly, in 2023, when it was increased to 50 euros, it motivated the waste managers to use better ways to manage waste for the use of energy production, and the amount of energy was cut by 50%, understanding that waste should not end up in the landfill, but it should be used. Another probably good example is plastic bag tax. Today we have to pay for thicker bags from 15 to 50 qms, microns, and up to 50 microns. So they're very thin plastic bags. So according to the data 2021, Lithuania was the greatest polluter in respect of the thin bags. So we had 227 units per capita, and from 2023 we introduced the tax, and shops can no longer give these bags for free, and shops themselves provide information that it allowed reducing the use of bags by 50%. So the stats is going to become clearer in some longer period, but we can see that even minimum measures, such tax measures that sound sometimes funny, and we joke about it with our family members and laugh at the government, and people sometimes even divide into camps about bags and fight over these 1 or 2 cents, but the effect is actually quite clear. And the deposit system in 2015, before it commenced, the market would receive back only a very small portion of such packaging, 33% or so. And now we have over 90% of PETs using this deposit system. And it's not only a good example in EU, among EU member states, but even beyond. And it's not the example that belongs very much on the state, because the market participates very effectively, and it's a good model. Talking about excise duty law, since 2021, the government undertook the obligation to give up and phase out fossil fuel exemptions, and also the aim was to gradually increase excise duties on transport and heating fuels. A new excise duty on peat from 2024, and from January 2025, new carbon levy for energy production enters into force. So we didn't have the COT component on gas, and CO2 within the CO2 component for LPG. And we don't have a greater excise for petroleum and petroleum gas. Very briefly, looking at the CO2 portion, since 2025, it will be applied on the indicated types of fuel, and it's counted 30 euros per certain amount of tons. So, we have 71, for example, tons per ton. And this model sends a very clear signal to the market and industry and everyone that to use fossil fuels is becoming more and more expensive. And we should understand that the second stage of emission permits is coming, so it's connected to that. And since 2030 or so, these taxes should become very similar. And CO2 portion should bring more money into the Lithuanian budget, but it's also a very important signal to the market. So very briefly about the effect on the environment. The transport sector is the greatest polluter, and personal vehicles comprise the largest part, 54%. And the average age of a personal vehicle is 15 years. And the greatest pollution is because we use diesel cars. More than 66% of such vehicles are diesel-run cars. And according to the calculations of the Environmental Protection Agency, we can see that excise law will have a big impact on the reduction of CO2. And the vehicle fleet of e-cars is growing, but it depends very much on other measures, because the excise law and taxing could not be the only measure, and we should think about infrastructure and promoting e-cars and supporting e-cars. The energy sector also had a big cut of CO2s, and until 2030, it should fall to 56% compared to 2005. And in the small energy sector, we see some cuts as well, but the situation is more stable. Although the Environmental Project Management Agency suggests various initiatives, and I see that my time is running out, but industry is another bulk polluter and amounting to 12.3% of GHG, and it's important to decarbonize the industry, use new technologies, and probably the most effect was seen by the pollution permits, which allowed a big reduction of emissions. And probably the excise law measure is not going to be as effective, because there are certain measures that must be impacted, including, for example, alternative fuel. So if we talk about measures for sustainable development and changes for the future for a bit, it's important to progress towards cleaner future technologies, etc. But tax instruments could not be the only measure to achieve the objectives, because there are other measures that should be used, and they are mandatory in the sector of transport. We should look for alternative fuels, also enlarged infrastructure, especially in regions. Currently, urban centers are the focus, but in regions, they see less development of the infrastructure, and there are also measures from the Environmental Project Management Agency on compensations various for the use of sustainable and greener equipment, and also public awareness is an important aspect, talking about the measures, because not many people understand, for example, that the transport sector is the greatest polluter, especially if you ask a bypass on the street. And our report that was issued a year ago accentuated that the interest in Lithuania in the environmental topics is low, so the awareness is not yet on the level of the EU. And green public procurement is yet another important field of activity, and the public sector contributes to economic growth, and all this more money should be used for green procurement. So challenges for the future. We face certain challenges, and green tax is only a part of green transformation. And the renewing infrastructure is a challenge, and taxing carbon is not enough. We need to enlarge the system. And of course, another challenge is policy and regulation volatility. Not every party focuses on environmental protection issues. So I'd like you to think about voting for those who do focus on environmental protection. So thank you very much for your attention, and I hope that you enjoyed my presentation.
Thank you, Karolis. Your presentation has truly put us down to earth. And we have finally arrived at our last presentation, and the last topic is derivative financial instruments and related tax treatment issues. The speaker is Dr. Egidijus Kundelis, Senior Project Manager at Ernst & Young Baltic. He also runs the tax division, consulting the companies for more than 20 years. He conducts tax organization processes, participates in projects on reorganization, and focuses recently on application of tax benefits. Egidijus, the floor is yours. Hello, my name is Egidijus Kundelis. I have the honor to close the speaker session, and I will speak about the issues of derivative financial instruments and their tax treatment. And I'm going to cover 5 aspects. First of all, what derivative financial instruments are, their tax treatment, accounting treatment, the related implications, and the possible solutions. So let's speak about the derivative financial instrument. If I had to explain this to my son, I'd say that a derivative financial instrument is like an umbrella that protects you. And the seller of the umbrella is the tool for sale. You sell it and you gain profit. In the business world, the derivative financial instrument is intended to protect yourself from fluctuations in currency exchange rates, in raw material prices, energy prices, and so on. And this is the financial asset or liability. It requires quite little investment and is implemented in the future. And let's move on to the accounting treatment of derivatives. In terms of accounting, the derivatives are identified as those to hedge, as hedging instruments to protect yourself, and there are derivatives held for trading. Hedging derivatives have very specific requirements, such as hedging policies, calculation of performance of the derivative, assessment of the derivative, and this requires effort. But if you do not comply with the specific requirements, then you hold this derivative for trading. And this leads accordingly to the requirements related to accounting. When we speak about the derivatives, we speak about three possible actions, which are revaluation, which is the assessment of its effect over the period, which can be a year, 2 years, or 10 years. According to the accounting standards, you have to assess this effect at once and reflect it in the balance sheet. Then there is partial fulfillment when you use this tool, you assess the period of its effect. And then there is the assignment or sale of the derivative. When we speak about the two types of derivatives, their accounting treatment is different in relation to these three actions. The simplest treatment is the treatment of trading instruments because it is reflected in a profit-loss statement. Everything seems to be clear. While if there is a hedging instrument, a bunch of interesting things emerge. Revaluation accounting implies that it has to be reflected in equity part of the balance sheet, but only the effective part. And it is established according to specific accounting rules. And the non-effective part is reflected in the profit-loss statement, while partial fulfillment is accounted in the profit-loss statement. And now let's move on to the tax treatment of the derivatives. Here again, if it is a trading instrument, the rules are quite simple. The key moment is that revaluation is not subject to taxation. The revaluation does not have any effect on taxation. However, tax losses from a trading instrument assignment are limited. They are calculated separately, and they can be carried forward for 5 years. If we come back to the analysis of hedging instruments and their accounting, again, there are differences. Revaluation is subject to taxation, which is different to non-current assets. If the change is positive, then it is profit, and if the change is negative, then it is loss. And no matter what the financial treatment was, this results in that partial fulfillment has to account for what has been accounted for during the revaluation, and the remainder will be treated as a taxable revenue, and certain deductions, allowable deductions, apply. So this was the tax treatment. But what are the implications of all of this? There are two main issues, and I will start with the conceptual one. On the conceptual level, essentially we can see that accounting treatment determines tax treatment. It has its certain pros, but also a lot of cons. And I believe that those cons outnumber the pros. So this treatment is based on the commentary to the corporate income tax. If we look at the law and systematic assessment of the law, I believe it contradicts to the law, because no other asset, no other liabilities and revaluation thereof are not evaluated for tax purposes unless these assets are sold. But in relation to the derivatives, the tax administrator decided that evaluation should be performed and included into tax calculation. This surely violates the principle of legal certainty, which we have already spoken about. And speaking about revaluation of non-current assets or other financial asset revaluation, the revaluation of derivatives should not be accounted for in calculation of corporate income tax. As a result, the companies violate their duty to properly calculate their corporate income tax. But what about the practical situation? Practically speaking, this can cause very serious implications, because if this is a very untypical, unconventional derivative without an active market, where you just cannot type the derivative name and check its price, and specific special professional assessment is necessary. And this may mean that your balance sheet value may change within the range from 10 to 50% just due to the individual evaluation. All of this is included into tax calculation. And if we have this accounting treatment, then tax treatment, then we have the taxable profit, then we have tax losses and carry forward of tax losses that is subject to the 70% loss. In the first year, we can have loss, and in the subsequent years, we will have to pay the corporate income tax just because the system operates like that. Is it fair? I don't think it's fair. I don't think it's just. However, the tax administrator follows this position, and our explanation note, unfortunately, went unsuccessful. So what are the possible solutions to this issue, or this dilemma, I'd say? The most practical solution would be equal treatment, both in terms of accounting and taxation, meaning that the derivative should be treated as a trading instrument. This would lead to no risks. But it is not acceptable to all companies. First of all, it may be unjust because you have acquired the derivative as a hedging instrument, and suddenly, for taxation purposes, you decide to treat it as a trading instrument. And when you reflect everything in the profit-loss statement, your profit can turn into your loss and you cannot pay out dividends. The shareholders will be unhappy, raising questions, why no profit? And you just give an answer that the taxes do not enable to do that. That is nonsense. But what are other solutions? The initiation of amendment of the tax law. This is the most difficult solution. And revaluation of derivatives should not allow for deductions, irrespective of the type of derivative, whether it is hedging derivative or trading derivative. And the creative approach is to treat it as a hedging instrument in the financial accounting, but as trading instrument for accounting purposes. But if I approach my colleagues, the tax administrators, with this kind of approach, I doubt whether they will agree with my position. Because they might definitely say that I have violated the tax calculation principles and have to recalculate taxes. And another solution is to apply to the tax dispute committee. And that is everything I wanted to share with you, and I look forward to your questions. Thank you very much, Egidius. We have heard the last presentation, and now we have time for discussion. If we have questions to you and all our panel participants, we will definitely ask questions to you. We would like to thank everyone for their attention, and let us move to the discussion.